Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London with Tom McKenzie.
And here are the top stories. Poised to pause. The Fed is set to hold rates for the first time in 15 months. That's as inflation continues to cool. Treasury yields tick lower, but European and US futures are in the red. GDP recovery. The UK economy bounces back in April to pre-pandemic levels, fueled by growth in services. But BOE Governor Andrew Bailey concedes inflation is proving tough to beat. Plus, Shell boosts its dividend as the energy giant's new CEO pivots back to oil and gas, the drivers of last year's record profit.
Now, Tom, let's take a look at the futures. There are two things people care about. First of all, those dividends and whether that will spur more companies to do the same. And then, of course, it's all about the Fed. Do we get a pause this time and pause for longer? Do we get something in July? The million-dollar question that will move all asset classes.
Yeah, the expectation that there's going to be a pause coming through from the Fed. And to what extent does that make the bar higher in terms of pushing through with any hike come July? There is still an expectation. There's about a 50% chance of that coming through for July. But the consensus is that Powell and co. will pause. Will it be a hawkish pause today? Their language, of course, from the Fed chair is going to be in focus. The CPI print came in line with the estimates, dropping to about a 2-year low in the States. And the argument from some that when you look at core, the picture is looking more favorable for the Fed. As we check in on these markets then, the FTSE 100 down 0.1%. Francine, of course, flagging the energy story, the corporate story coming through, of course, in terms of that dividend announcement from the oil major that is Shell. We'll look across that sector for you just in the next couple of seconds. The German DAX is currently down about 10 points. The Spanish IBEX is also flat, and the French CAC 40 flat as well, waiting for the catalyst coming through from the Fed after the upside. Again, don't forget that we've seen year to date for European and US equities. Switch it on and see how things are looking, reflecting on the 2-year yield, given the yield pull down yesterday in terms of the front end. 465, yields off just a basis point in the session today. The futures in the US flat after you got back up to that 4,400 level for the S&P. Do you need to see a broadening out that rally to really pull in further flows and keep the momentum going? The pound in focus, of course, again, given the strength yesterday on the back of that wage data, 126 for the pound. The BOE Governor, Andrew Bailey, again saying, yes, it is a tougher flight when it comes to inflation here in the UK. Brent, $74 a barrel, just gaining 0.3%. There's a speculation around additional stimulus coming through from China. We'll see if they come through with that medium-term lending facility cut. That would be Thursday. And as well, we hear that the US is restocking its oil inventories. $74 a barrel on Brent. Francine.
Now, cooling U.S. inflation may have sealed the deal for the Fed to pause its 15-month rate hiking cycle. Here's what Bloomberg TV guests have been saying about yesterday's CPI print.
We got a strong core print today.
It was a good report.
This is a step in the right direction.
Overall, inflation continues to come down.
Inflation is coming down.
The Fed has to be pretty happy with these numbers.
Everything's sort of lining up for inflation to come out the way they would like to see it.
And certainly it takes away some of the pressure for the Fed.
That should buy them more time to keep watching the data.
I would vote for wait and watch.
It doesn't look like they're going to need to hike this week.
The skip is priced in. That makes a lot of sense.
Definitely a skip that's already been communicated.
It is sort of a grudging skip, if you will.
I think it's a skip at this point, and I think it's going to turn into a pause.
It turns into a pause after that.
Fed speak suggests that they're likely to go one more time in July.
It doesn't look like they're going to need to hike in July.
They're going to be communicated that they have to be flexible, that all options are still on the table.
Okay, joining us now is Patrick Armstrong, CIO at Plurimi Wealth. Patrick, good morning. Thanks for joining us on the studio. What do the markets need to see, to hear from the Fed to continue this upside for equities?
A dovish surprise that he's rethinking the July hike. I don't think we're going to get that. He's going to want to keep his options open. I don't think July is decided yet. I think the Fed's done. I don't think we're going to see another hike from them. The inflation's on a path that they're going to be comfortable with. To get it to 2%, you probably have to push the economy into a recession. I think you're much better off keeping it this 2 to 4% level where you don't provoke a recession. If you look historically, all the recessions of the past have been provoked by a Fed that's hiked a little bit too much at the end and pushed the economy into a recession when inflation was still looking a bit sticky. And I think the Fed will have learned from that.
So, Patrick, Ken Griffin is increasing his focus on credit trading because he's bracing for a potential U.S. recession. He's wrong.
Well, you can't say he's wrong, but a recession is still plausible. I think the Fed's going to err to the side of letting things run a little bit hot, avoiding that recession. The employment backdrop's still very good. Consumption's still very strong. Consumer and household balance sheets are still pretty good as well. So all of those things create a scenario where you don't have to have that terrible recession. So recession's possible if the Fed wants to keep hiking. But I think everything being equal with a Fed that pauses and stays here for the rest of the year, I think we may avoid the recession.
It was the recession expectations that led to many in the markets betting on cuts by the end of this year from the Fed. You pushed back against that. You bet against those cuts coming through. Do you fade that bet now?
Probably we've got to start to now. So we put that trade on about May 8th when, market was just pricing a wave of cuts. I think 4 cuts by January was what it was pricing. Right now it's pricing pretty much 1 cut in by the end of January next year. So I think it's still going to go my way where we just have a Fed that sits on its hands now for the next 6 months. There's a little bit in it, but most of that trade's paid off now.
So, Patrick, what are you invested in then right now? Is it, certain parts of credit, or do you go for equities?
I like short duration credit still. The yield curve still compensates you to be at the front end. You get no volatility with that. Spread duration is mitigated if I'm wrong about the recession as well if you're in short duration paper. I still love the big banks, the senior bank bonds. Every regulator has shown they'll never let those fail. So I think you get a bit of a premium to be in a financial bond pickup versus industrial credit, but probably safer even because of the regulation backdrop.
You own, obviously, individual names. We'll get into that shortly. Do you want to buy the index, though? Do you need to see a broadening of the shift away from some of the mega cap tech in the US, a broadening out of that equity rally to be buying the index, to be more confident to lean into equity?
I think you have to have a broadening if you do expect equities to continue to rally into year end.
Do you see a broadening?
I do. It's really been multiple expansions since the October lows. The S&P was trading at about 16 times forward earnings, 12-month forward earnings in October. We're almost getting close to 20 times forward earnings right now. Every bit of move of the S&P since the October lows to where we are today has been multiple expansion. Earnings per share estimates were $233 a share, 12 months forward in October. They're $229 a share, 12 months forward from today. So actually, analysts are forecasting lower earnings in 12 months from today than they were in October. You've had a 22% rally in the S&P 500.
So going forward, are we going to see a correction?
I think you're going to see dead money in the big caps. I continue to own all of them.
What's dead money?
Where they just don't do anything. Basically, they're great companies producing incredible cash flows, trading at 30 times earnings, and it's hard to get further multiple expansion from here. So I'm continuing to own them. The biggest mistake in my career for many, many years is selling things when they get a bit expensive and then they get more expensive. So I'm sticking with them for now. They don't represent value, but they're incredible companies producing lots of cash flow. I think they'll probably continue to stay at these multiples. But there is cyclical exposure in these companies, and I think they're being priced as if they're secular growth still. And if we do have a recession, I think there's going to be some surprises with the mega cap tech that in the past they've just gone through recessions with no disruption to their earnings and cash flows. They are more cyclical than they have been in the past.
Shell is the corporate story of the day with the dividend announcement. Do you buy energy? Do you buy into that, or are they reverting to the old playbook of last year? Is there a risk that they're actually those investments in terms of green, in terms of renewable, are not going to come through for Shell because they're refocusing on oil and gas?
I think you have to have a bit of a focus on both sides of that. You get incredible cash flow from oil. Anything above $60 a barrel, you get incredible returns on investments for oil companies. So they've not really been spending on exploration, development of reserves, any of the major companies. Green is the future. So you've got to...
Do you add Shell?
I own Shell, and it's been one of our laggards this year. It's a company that's just producing lots of cash flow, paying dividends, buying back shares. It's not really been investing in growth, but I just want the cash back. And I think it is a company that's too cheap, and I think we're going to have oil prices, with my view that we don't fall into a meaningful recession, I think oil prices are going to remain pretty firm around these levels. I don't think there's upside, but I think you're not going to see the downside that I think everyone's really scared to death of cyclicals, and I think they may be the winning story in the second half.
All right, Patrick, thank you so much. We'll talk more about the potential winning story in the second half with Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Coming up, the UK economy bounces back in April to pre-pandemic levels, but the BOE's Andrew Bailey concedes inflation is proving tough to beat. More on that story next, and this is Bloomberg.
CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman Sisters rather than Lehman Brothers, the world might well look a lot different today.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg. Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg.
Welcome back to the Open, everyone. 11 minutes into the European trading day, there's clear positioning across the board that was like that in Asia earlier, positioning for a Fed pause. What comes after is, of course, the main question. We look at a couple of things, including Shell raising its dividend, and then we look maybe at some of the banks because of the TLTROs coming to an end, or actually having them to repay back the ECB on June 28th, Tom.
Yeah, a big challenge for some of those Eurozone banks. To the UK now, though, and the economy here bouncing back in April with GDP gaining 0.2%, that's after a 0.3% decline in the month of March. That's partly due to growth, strong growth in the retail sector, which offset a construction slowdown. Lizzie Burden, our UK correspondent, joins us for more. Lizzie, break down the GDP data for us then. Does this suggest that there is sustained momentum in this UK economy?
Well, a big driver of this growth, Tom, was services, because remember in the previous month they'd been weighed down by strikes and the wet weather. I think it was the wettest weather in 40 years for England and Wales in March. But this is what we expected. It's what economists expected, and it's what the jobs data suggested yesterday, this resilience in the UK economy. The flip side of that, though, is that it's going to spur inflation. The Bank of England will have to react to that. It looks increasingly likely that there'll be more rate hikes in the pipeline. That's what markets are expecting, and that will have an impact on the growth of the economy. The fears of a recession are being reignited.
Lizzie, thanks so much. Lizzie Burden, our UK correspondent. I don't know, Patrick, what you do with the UK right now. If it's more difficult to invest, or you go for the big names, even if they're not green like Shell, because the dividend plays there, and it will spur more companies to do the same.
Yeah, I prefer the large cap companies in the UK still. You've had a pretty strong employment backdrop, consumption's been good, but I like the healthcare companies, they're predictable cash flows, they're trading at reasonable multiples. I said I still own the oil companies, again, for the cash flows, the dividends there. The UK is probably the one central bank that's going to have the most difficult choices to make because it can't sit on its hands. I was saying the Fed could let things run a little bit hot and avoid that recession. The Bank of England can't. Where inflation is, the Bank of England's still got a lot of work to do. And it may not be in a recession, but it's pretty anemic growth at best is where we are.
So where you kind of push back on the strong narrative around a recession in the US, you think the chances are higher in the UK. Well, how far do you think the BOE goes, and how much damage do you think they end up causing?
Yeah, they've got to do another 50 basis points, and that's another 50 basis points relative to the Fed, and they may even have to do another 75 because inflation is just more persistent. It's been a higher inflation economy for decades than the United States. We're used to inflation a little bit.
So what breaks in that scenario?
It just, every incremental step you do pushes you closer to recessions, and the home ownership, mortgage rates, that's a big influence on consumer wealth and consumer spending as well. So the UK is really linked to that as well. So the Bank of England rate doesn't immediately affect mortgage rates, but on two-year fixed, things like that, you've got an average duration of probably 9 months until mortgages roll over to be reset.
But Patrick, are we in general too negative about the UK? So, 7-8 months ago, we were expecting it to be in recession. A lot of the forecasts had to be kind of taken higher. And then you speak to a lot of the bank chief executives, and they say they're not really seeing anything ugly. People keep on spending. Yeah. I know it's a drawdown of savings as well, but there's nothing to signal stress.
There's no stress right now, I'd say. Yeah, if the Bank of England could sit on its hands like the rest of the central banks, I think I'd feel pretty confident that the UK would be just muddling through with a low growth environment. But the UK just has to hike more, and I think that is a risk for the economy, where I think the Fed's got to the point where they maybe don't have to hike again, and that's going to be a tailwind for US growth relative to UK growth.
Slightly different focus here. What is the Patrick Armstrong AI play?
Adobe's our most recent buy. I bought that about a month and a half ago, and it was a stock that was up flat year to date, whereas all the other mega cap stocks were up 30 to 50%. And it's up 40% since I bought it already, so I don't even know if I would be buying it right now. Again, it's a stock that's, 30 times forecast earnings, which I think the AI, the generative AI that it does, it's starting to get in the price right now. NVIDIA is the purest play, but I can't get my head around 25 times sales, so I wouldn't own that one. But the mega cap growth companies are stocks I still own. Yeah. I don't think they're compelling value, though.
Patrick, how much of it is hype? And again, we seem to bundle everything as AI. How much of it will come down?
There's a lot of a speculative frenzy right now that you have to have it, and you feel like you're missing out. So you have that FOMO trade in it right now, but it's real. That's where technology is pushing us to. There's going to be great advances in productivity of companies who implement it and use it effectively, and companies that don't are going to suffer. So anything that's real creates a bit of a hype around it in the early stages, and then it becomes part of a driver of new productivity. And I think that's where we are with AI right now, that there probably is a bit of a speculative frenzy around some of the stocks, but I think it's there for a good reason as well.
Patrick, last one on China. They cut short-term rates. It seems that they're very likely to cut rates again, the medium-term lending facility on Thursday. Are you more convinced that China is coming to the ground now with real stimulus and real support for this economy? And do you want to lean into that, and how?
Yeah, China's going to grow probably 6% this year, which is strong growth compared to the rest of the world. It would be doing incredibly well if the rest of the world was doing incredibly well, because it's still the manufacturing engine for the consumption in the West.
So how do you play that growth?
I'm playing reopening through Las Vegas Sands, so Macau, casinos, things like that, allowing travel. That's one of the stocks we own. We own Alibaba, which is incredibly cheap, but it is a stock that comes with risks if geopolitical tensions do pick up. So I like to own the commodity companies still. They're very cheap. That's a play on Chinese growth where you're not getting the issues that come with a company that's domiciled in China and have risks from the geopolitical situations.
Okay, Patrick Armstrong, always fantastic. Really great to get individual names as well, how to play this market. Patrick Armstrong, CIO at Plurimi Wealth. Thank you. Coming up, Shell boosting its dividend, as of course we discussed there, as the new CEO refocuses on the fossil fuels that drove those record profits last year. We're going to get into the details of that, the implications for the broader energy space. Stay with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
News breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Today, will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment. And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
Welcome back to the Open. We are 21 minutes into the European trading day. Yes, it is Fed Day. Plurumi Wealth's Patrick Armstrong saying the Fed are going to be done. They're going to pause and they're going to hold there because this economy is holding up and inflation is coming down. Across these markets, you do have a bit of a turnaround in sentiment. European equities up 0.2%. Futures in the US also turning around. S&P E-mini is now gaining 0.2%. Fran.
Now, let's take a look at the stocks on the move this morning. There are many with Joe Easton from our equities team. Joe, what do you have for us?
Morning, Fran. So we are seeing some pretty nasty moves in the recruitment sector today after a warning from Robert Walters saying that their net fee income has dropped about 10% in the past 2 months, and they also expect their earnings to be significantly weaker than analyst expectations. We're seeing Robert Walters itself down 15%. Also Page Group, Hayes and Randstad all dropping, as you can see on the screen, hitting that sector across Europe today. Meanwhile, I'm also looking at Entain over in the gambling space. This one getting hit 10%, as we see on the screen. The FTSE 100 firm with a market cap of around $10 billion. They have actually raised shares today. They're selling shares at a discount to where it traded yesterday. Market's not liking that at all. They're using the money to buy a company over in Poland, which does some online casino games and also sports betting. That one's called STS, and that one's rocketing over in Warsaw, up around 13%. But really, Entain is the worst performer that we've got in the UK at the moment. Meanwhile, over in France, we've got Casino, the beleaguered dealer in the supermarket space. This one obviously had a breakdown in talks with Carrefour a few years ago and hasn't really recovered. However, there is a bit of hope today with a billionaire offering to potentially rescue the firm with around 1.1 billion euros in capital. Now that stock was jumping at 17% earlier. It was briefly halted in Paris trading. This is the firm that of course owns companies like Franprix and also Spar as well. The debt load's been a big concern for the firm, but a glimmer of hope today, and Casino is the best performer in Paris, up 16%.
Okay, Bloomberg's Joe Easton on the stocks to watch. Thank you. Another stock in focus and on our radar is, of course, Shell. The energy giant is increasing its dividend by 15% and boosting natural gas and production as the new CEO, Wael Sawan, refocuses on the fossil fuels that, of course, drove record profits last year. Let's bring in Bloomberg's energy and climate change reporter, Will Mattis. Will, what is the rationale from Shell when it comes to rewarding their shareholders? And is this basically a middle finger to this current climate crisis?
Well, Shell is basically saying that oil and gas is what makes them a lot of money, and that the low carbon stuff that, a couple of years ago said was going to drive growth for the company just isn't stacking up in returns. And if you look at the valuation of Shell and BP compared to Chevron and Exxon that haven't made that low carbon pivot, it's just enormous. I mean, investors have been rewarding those companies for just selling oil and gas and punishing the ones that have been doing the transition. And now, we've got a new CEO at Shell who came in at the beginning of the year and is taking a different direction and saying, we'll do some low carbon stuff, but only where we can make good amount of money from it.
But the transition is going ahead, and if you look at the economics of it, I mean, it's no real escaping it. Will they lose out in 15, 20 years, or will the technology catch up?
Well, their position is, prioritizing shareholder returns now. I mean, these plans are really looking at to 2030. Like, you look at their upstream oil and gas production, they said, after cutting it, they previously had a target of 1% to 2% reductions every year. That's out. They say we're going to keep it steady through to 2030. What happens after that, we don't know. But you're expected to see record high oil demand this year, and that's where they're focusing. That's where they want to make it.
Do other European oil majors follow suit?
Well, in some ways, Shell is the one following. Earlier this year, BP, they rolled back their, aggressive plans to cut oil production in the short term. They're going to cut less aggressively than they thought before. And what happened with their share price, it jumped 15% that week after they announced that. So the market is giving clear signals to these companies, and they're, following.
Well, what happens next in general? I mean, are we going to see protesters? I know that at the last AGM, there was a lot of shareholders with small, a stake in the company that really went after them.
Yeah, well, Shell is in New York for this Capital Markets Day. American fossil fuel companies tend to attract fewer protesters at their events. And I have noticed that the address of the CMD isn't as publicized as like a AGM would be, and so I don't know how many protesters there will be. Shell's headquarters here in London is regularly a protest site, even if there's no big event happening. So I'm sure the people that are, rightfully extremely concerned about the climate crisis are going to be upset about this and raising the alarms that they have been. But I think Shell's position under this management is, the world can cut emissions if they want, and we'll adjust to that, but they're not going to, stop selling oil and gas as long as there are people who want to buy it, regardless of what happens to the climate.
Well, thank you so much, Will Mattis there from our oil team. Coming up, we speak with Insect Chief Executive Officer Antoine Hubert, one of the most successful AG tech startups in Europe, about the funding environment and, yes, eating proteins from insects. This is Bloomberg.
Middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yangwang yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The Fed set to hold rates for the first time in 15 months as inflation continues to cool. Treasury yields tick lower. European stocks and U.S. futures trade mixed. The UK economy bounces back in April to pre-pandemic levels, fueled by growth in services. BOE Governor Andrew Bailey concedes inflation is proving tough to beat. Plus, Shell boosts its dividend as the energy giant's new chief executive pivots back to oil and gas, the drivers of last year's record profit. So, Tom, if you look at the markets, how's it looking?
Yeah, Fran, the sentiment has turned slightly more positive as we look ahead to that Fed decision. The expectation, again, that you're going to get a pause coming through from Jay Powell, but maybe a hawkish pause. They probably, is the view from many out there, want to leave the door open to a July hike if the data comes through to support that. But, of course, the commentary is going to be essential. After that CPI print, of course, out of the US yesterday came in line with expectations, lower, the lowest level now, at least at a headline basis for about 2 years. The European stock benchmark gaining 0.2%. The DAX over in Germany adding 31 points, above 16,260. And the FTSE 100 back above 7,600. But don't forget, the FTSE 100 is the laggard versus European stocks and their US counterparts. But today, gaining 0.2%. Across your sectors, the last time I checked, it was autos that were top on the list. Technology, though, taking a bit of a hit. Autos gaining 0.6%. Real estate also looking a little bit more attractive, gaining 0.6. At the bottom of the list, there's travel and leisure down 0.7. Tech also off by 0.3%. Maybe a little bit of profit taking. But again, the clarity needed from this Federal Reserve later today, and maybe that is what's going to be the catalyst for these markets. The data, of course, from the UK, slightly more positive in terms of the growth trajectory, but the challenge for the BOE when they meet on June 22nd is clear and present. Fran.
Now, Tom, our next guest is the chief executive of one of the world's most successful AG tech startup. His company, Insect, with a Y, Winesect, the world leader in the production of natural insect proteins and fertilizers. Now, the firm actually transforms insects into high-end, high-value ingredients for pets, plants, and humans. Antoine Hubert, chief executive of Insect, welcome to Bloomberg. I think last time we had you or Isabella on, we actually tried some of the insects, and the newsroom, I have to say, still talks about that very moment. Is the transition to a protein which is not animal-based slower than you thought it would be?
Good morning. I think the traction is really good in our core market, which has been pet food since 7 years on the market. We see a very strong demand, and we are really constrained by supply today. In 10 years, we have been building a new technology, a new platform, farming insects at very large scale to be competitive based on automation. It takes time to build this new industry with our suppliers, with our ecosystem. But we are reaching the point now with the very large vertical farm north of Paris in Amiens that is just now starting and delivering our customers. So pet food is working very well, and we expect, hopefully, human food to take off in the future.
Antoine, give us a sense of the timescale then for human food from insect inputs, and how you're thinking about energy costs as well, how that's changing your focus on making sure that you can extract value and margin from these products. Where do you see the biggest, the fattest margins coming from in terms of the different outputs for your business?
Clearly, human food has the highest margin in our business model, but it's a very small market today. Pet food is the great, I would say, balance with high margins, very deep market compared to animal feed like fish feed or chicken feed, which are really commoditized market, low margin, where our focus is less today. And this is why we managed to raise the Series D a few weeks back of 160 million, which was very good achievement in this very tough financing environment, because we could prove to investors we could focus on profitability with these high-end markets compared to the commoditized markets.
But Antoine, are you seeing consumers, shifting and changing attitudes towards eating bugs? And if it is slower than we were thinking, which frankly, looking at the numbers, it feels like it is, what would make a difference?
The difference was the limiting factor so far was regulation first in Europe. It was closed. It was impossible to sell insect in human food. It just opened last year. Then the second thing was volumes. Again, the capacities were not there. Now with the very large farm we're starting, it's coming. And third, we start to see good products and promoted by chefs, influencers on social media. All of this will create a momentum. And based on everything we built on pet food brands, and a lot of pet food brands are also in human food brands, there is a common world and a common ecosystem to grow this market in human food that we expect to grow, but still small compared to pet food in the coming years.
You talked about that raising of 160 million, as you say, significant given the current funding environment. How much runway does that give you, and how are you deploying that cash?
So today we announced the first tranche. So it's clear we are running a second tranche now that will enable us to get to this profitability points with our investors. So focusing on this high-value product, getting the site really generating revenue in the next few months. So we are now growing the insect population in our farm in a couple of weeks. We'll be then processing and selling them into the market. So we are really at the inflection point that is getting close to the gross margin positive and then EBITDA positive margins.
Antoine, when will you actually turn profitable?
It's gonna be in the close time, maybe in the next 2 years. That's the purpose of the EBITDA positive on the site. It's a long journey when we are manufacturing in the farming world, but we are almost there now. Yes.
Can you give us a sense of the contracts you've been signing in the last few months, the kind of input that's coming through, the kind of deals that you're striking, and the importance of partnerships?
So we have been now selling 200 million contracted revenues. So it's mainly with pet food CPG brands, but also with farmers, I would say association, cooperatives, buying our fertilizers and new biosolutions. So we have been selling new contracts recently to boost the plant's growth. So it's really seen as a positive thing for regenerative agriculture. It's something very important for the farmers, still the CPG brands, to change their full supply chain and be more sustainable. So we see a very big traction there, and we have been increasing our contracted revenue years after years, and we have about 1 billion of negotiation in our pipeline with customers there.
So, Antoine, what happens in a couple of years? Do you want to sell? Do you want to grow? Do you want to IPO?
We want to focus on getting the products sold on the market, but we are going to grow. We have announced also a partnership, joint ventures agreements with a Mexican company. So we're getting close to a full closure there with them. That will be the next step of growth for us, growing in partnership, which is a way also to be less capital intensive and share the investment with other corporates that are really keen to be in the sustainability and food ecosystems. So for us, it will be grow still in Europe and border in North America especially.
Creating efficiencies, getting to profitability. You cut headcount by about 20%. Are you done in terms of the efficiencies that you can find when it comes to staffing?
I think so. We have been indeed reducing the people on some functions that were more on this like animal feed commoditized market, on some engineering, because we are now working with partners on this. But we hired other 30 to 40 people this year focused on the manufacturing. So we have been just refocusing the different positions. I think we get to a good efficiency there, but it's always something to look at savings in this tough environment.
Such an interesting company, Antoine. Thank you so much for joining us. Antoine Hubert, Chief Executive there, Chief Executive Officer of Insect.
Okay, coming up, we're going to take a look into a possible future with AI video creator Synthesia. That's as the company reaches tech unicorn status, another big funding round. That is next. This is Bloomberg.
young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. The top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg.
Welcome back to The Open, everyone. 40 minutes into European trading day, it's Fed day. It's Wednesday, but a lot of the focus is actually how do you position ahead of the Fed possibly pausing, and then we should have an indication of what happens in July. For the moment, European stocks gaining some 0.3%, Tom.
Okay, now back to AI. An AI video creator, Synthesia, has become a European tech unicorn. That's after raising $90 million in a funding round led by NVIDIA's venture capital arm, N Ventures, and importantly, of course, Accel as well. Major investors, major in the VC space. Very pleased to say that we are now joined by CEO and founder of Synthesia, Victor Ripabelli. Victor, welcome. Congratulations on the raise. Talk to us about what you're going to do with this capital. Accel, and really what stood out to me as well was involvement of NVIDIA. How are you putting this $90 million to play?
Sure. Well, I think we weren't really out there looking for funding. We have a great sustainable business that's growing really, really fast. But with this partnership, we just saw an opportunity to double down and accelerate on building an even better product for our customers. Obviously, for us, a big part of that is accelerating the fundamental AI research that underpins the entire Synthesia platform. And that's really where most of the money is going to go, right? You know, you need lots of compute, you need the best talent in the world. And with the capital, of course, but also with these two new partners, we're just very excited to double down on that.
Victor, do you worry sometimes that there's actually also a lot of hype, and so that for the moment it's going great, but in 2-3 years it's going to be more difficult if people then latch on to something else?
For sure. I mean, I think the last 6 months for everyone who's been in AI, and I think the world has been quite the ride, right? I think for us, though, you know, we launched the platform 3 years ago almost. It's been very consistently delivering value to our customers, and we have, you know, one of the most important philosophies at Synthesia is utility over novelty. Mm-hmm. And while we've of course seen a bump the last 6 months because of all the hype, I think this round and the interest of investors is very much a testament to the absolutely amazing business fundamentals that sits under that, right? It's not just top-line revenue. This is about great retention, great usage, and really delivering value for our customers more than just delivering new, cool tech demos.
And Victor, a couple of weeks ago, I had an avatar made of myself, as you know, with your company, with Synthesia's help, went into one of your studios. Almost universally, when we showed it to people, when I showed it to people, the reaction was both, wow, this is amazing, but also, this is terrifying. People are unnerved. I mean, are they right to be anxious? Are they right to be concerned about jobs, about deep fakes? How do you address that reaction? This is incredible, but also this is pretty terrifying.
Look, I think that's a very normal reaction, and I think it's the right reaction, right? I think there's no doubt that these technologies have tremendous potential to do amazing things for the world, to make everyone much more creative and better communicators. But they also come with a downside, right? And AI safety is incredibly important, not just for us as a company. That's something that's deeply embedded in the way we run the business. But also, I think for the world, right, it's a really important topic. And I'm very pleased to see the last 6 months how this has become the topic du jour. Everyone is talking now about AI safety. How do you roll out these technologies in a responsible manner? I think there's lots of discourses going on. There's some which is very long-term, some much more short-term.
There have been reports that some of your digital avatars have been used for kind of nefarious purposes. Do we need to accept that deep fakes are going to be an inevitable byproduct of what you guys do, whatever kind of ring fence you try and put around the technology?
So safety is incredibly important to us. We do very hard content moderation and very restrictive on what kind of content you can create on the platform. That said, we're not perfect and we're always improving. I do think that if you look at the industry, I think I'm very happy to see everyone coming together and agreeing that we should put guidelines in place and safety guardrails for how you use these technologies. But I think as with any technology, right, there's going to be lots of open source things. There's going to be other players who might care less about the ethical part of this stuff. It is a new reality that we're gonna dive into, and that's why it's really important, just like with any other powerful technology, that we put the right guardrails around it, and that's both from a legislative perspective, but also very much, I think, on the companies and on the companies themselves.
Victor, as you said, so you started of course, the company 3 years ago. Mistral AI is a new startup that I think had one of the largest seed rounds ever for a European generative AI company. I mean, is there now a barrier to entry, or are you going to see engineers from DeepMind and Google come into force because there's so much money in the space?
I mean, the amount of capital going into, especially like this sort of deep foundation, large language models, which is what we're seeing here with Mistral, is very real. And I think if you look at the big tech companies, there's definitely a lot of people who are reconsidering if that's the right place to be, if you want to have maximum impact as a researcher and see your technology out in the world. I think the barriers are really high. I think seed rounds like this also talk to the fact that it is incredibly expensive to train these models. So I think I don't think we'll see 100 companies raise $100 million to try and train these things, but I think the appetite from investors is definitely there, and I think we'll see much more interesting stuff.
Are you surprised that the likes of Google and Microsoft haven't come out with their own versions to try and compete with what you're doing?
I think we'll always care much more about the very specific use case that we have. So we work with the enterprise, very large customers for a very specific set of training, specifically use cases. And I think for those companies, they care more about the infrastructure layer, kind of the building blocks for everyone else to build their tech on top of. So that's not something that keeps me up at night.
Is it easier to raise money in the UK or elsewhere? Is it easier would it have been easier if you were in Paris?
Well, I would say that maybe the tide has shifted a little bit now that generative AI is on everybody's lips and it's clearly like the theme for investors. I'm very, very happy to say that we have a European lead in Excel for this round. That's a first for us. Unfortunately, I have to say that for the previous rounds, it has been difficult in Europe because I think the European mindset is sort of more on the metric side of things, less on the visionary side of things. Today, we're a great business with amazing metrics, but the kind of previous funding rounds, I think you definitely had to be able to extrapolate from where the technology was at that point in time.
Would you list in the UK?
We'll see when that time comes.
Where else would you list?
Look, right now we're just focused on building an amazing company and delivering value to our customers. And when we get to those type of questions, we'll deal with that.
That's the line, isn't it? Creating value, focus on the customer. I get it. Victor, in terms of look, you touched on regulation. The Prime Minister Rishi Sunak today, or this week, I should say, on Monday, saying, look, we want to be the global hub in terms of the home of AI regulation. Have you had conversations with the Prime Minister? Have you had conversations with his team? Are you involved in that discussion?
Yes, we've been involved both. I've been involved both in the European AI Act and also with the UK legislators here. And I think for me, I'm definitely pro-regulation. I think we should set up the right guardrails for this technology. I think the UK is taking a sensible approach of trying not to regulate too concretely on specific technologies, but more on sort of the outcomes of those technologies. So I'm very pleased around that. But I think ultimately what's actually most important for the world and for people who are building these technologies is clarity. Right now, there's some companies abiding by one set of rules and other companies abiding by a different set of rules. And I think we really just need to, as a global society, of just agreeing on what's the kind of rough guidelines. It's better to have something that isn't perfect, but something everyone can agree on, than having lots of specific regulation in different
But Victor, I mean, rarely does it work that way. Can the UK really lay claim to regulating, AI? Do you think this will be a good hub for that kind of regulation, for the attraction of capital for your industry?
Look, I think there's people who are much more, who are much better at answering that question than myself. At my heart, I'm a builder. I can say that I think the UK has a lot of the ingredients required to actually be an AI superpower, which I think every government in the world right now wants to be an AI superpower. I think few countries have, is basically the talent density that we have in the UK. So I think that's something that would rule in favor of the UK actually having a good shot at being an amazing hub for AI moving forward.
Victor, before we let you go, a lot of the videos, a lot of your services are used by corporations for kind of internal comms. What are some of the other use cases you and the team are thinking about for the months and years ahead?
So I think as the technology gets better and better, like you have your own avatar and it's great, but it's definitely not as expressive as the real Tom, right? As technology gets better and better, will enable much more rich and complex videos. So you can imagine avatars walking around in a room, having conversations until we, I don't know what the timeline is, 3 or 4 years. Maybe you can make something that sort of resembles a Hollywood film just from your laptop without the need for anything else than a Synthesia login. So in some ways, we've come a long way. This is a big milestone for us, but there's so much more to build, right? I think the technology is still in its very early phase, and there's so much more to go on. And I think the obvious things will be marketing, sales, and creative entertainment content if we take sort of a 5-year time horizon.
Really, really fascinating.
That fills me with angst. I don't know, avatars, is that good or bad?
Movies in 3 or 4 years.
Well, look, I really think this is about making it easy for everyone, right? And I understand the fears around, like, this is going to take my job. I really don't think it is. We can synthesize instruments.
We're going to hold you to that, by the way. Francine and I are going to hold you to that in a few years' time.
Sounds good. But look, I just think you guys will be able to do much more. You can create, 100 different variations of the news for 100 different people. You can talk everyone in a different language. I think the human element is always going to be central to anything that has to do with communication and creative content and storytelling. These really are just tools, just like we've seen, Photoshop in the past, augmenting how photographers do their work, and so on and so forth.
Okay, really fascinating. Victor, thank you for coming in. Victor Ripperbelli, the CEO, co-founder of Synthesia, of course, on the raising of that $90 million with a unicorn status now for that company.
Coming up, Donald Trump urges prosecutors to drop charges against him, calling it election interference. We'll bring you the very latest from the court case. That's next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Open. 53 minutes into the European trading day. The sentiment is modestly positive, gains of 0.3% ahead of that Fed decision, Fran.
Now, Donald Trump has pleaded not guilty to federal charges of mishandling state secrets. Bloomberg's Kaylee Lyons has more.
History was made here at the Miami federal courthouse on Tuesday when former President Donald Trump became the first ever former president to be arraigned on federal criminal charges. He was arrested and processed and pleaded not guilty to all 37 counts related to his handling of classified documents at his Mar-a-Lago resort here in Florida after leaving the White House. There were also hundreds of pro-Trump supporters that were here at the courthouse today. Police that I spoke with indicated that there had been no violent incidents that they were aware of. And President Trump, after leaving the courthouse, went to a popular Cuban restaurant here in Miami, Cafe Versailles, to speak with some of the reporters. As for where the legal proceedings go from here, this case will move from Miami to West Palm Beach, Florida, where Judge Eileen Cannon, a Trump appointee, will be overseeing it. It then becomes a question of the timeline. President Trump has a reputation for dragging legal proceedings out for quite some time. So we could see this fight going well up to the November 2024 election, or perhaps even beyond it. And on the subject of this election, we will see if this has the galvanizing force among former President Trump's base, as happened with his first indictment in Manhattan earlier this year. He is still the front runner for the Republican nomination in the GOP primary at this point. The general election, of course, is another matter, and we have to consider between now and November of 2024, the former president, could still face legal headaches. He is still under active investigation in different investigations into his attempts to overturn the results of the 2020 election, as well as the January 6th riot at the U.S. Capitol. So his legal woes do not end here in Miami. Kaylee Lyons, Bloomberg News.
Okay, let's take a look at what the markets are watching today. 10 a.m. UK time, Euro area industrial production figures for April. They are released later on. We're going to get US PPI data at 1:30 p.m.
Now, this evening, plenty of eyes will be on the Fed rate decision. That's at 7 p.m. That's followed by a press conference from Chair Jay Powell, 7:30 p.m. Now, the focus firmly on the Fed and, of course, what this means. If we pause today, is that it? Are we going to then see cuts by the end of the year, or is it just one short pause and then we go back to hiking? That's really the trillion-dollar question that's repricing a lot of bonds.
Yeah, Patrick Armstrong, of course, of Plurimi on the show earlier saying he thinks they're done when it comes to the Fed. Citi, though, suggesting you could get a surprise hike coming through later today from the Fed. But they are the outliers as we look at what's happening in the bond markets, and yields have been coming in, particularly at the front end, Frank.
Yeah, and Ken Griffin, look, he's loading up on credit because he's also getting ready for a U.S. recession. I think that's not insignificant.
That is it for the European market open. The surveillance early edition is up next with US futures pointing to gains of 0.2 on the Nasdaq. S&P E-minis close to gains of 0.2 as well. Here in Europe, upside of 0.3%, with real estate at the top of your sectors list, gaining 1.5%. At the bottom, travel and leisure and technology. Stay with us. This is Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food. It gives us jobs. It gives us, of course, oxygen. We're taking too many fish out. We're polluting it. We're making it warmer. And only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Fed set to hold rates for the first time in 15 months as inflation continues to cool. European stocks mostly higher, U.S. futures mixed. The UK economy bounces back in April to pre-pandemic levels, fueled by growth in services. Stubborn inflation hangs over sentiment. And we'll be speaking shortly with the former Chancellor here of the UK, Nadhim Zahawi. Plus, Donald Trump urges prosecutors to drop their charges against him after pleading not guilty to 37 counts pertaining to classified government documents. So it is a busy day. We look, of course, also at some of the corporate news, with Shell announcing that it will double down on oil and gas. And the focus, of course, for Shell is also extra dividends. The other story regarding oil is the IEA saying that oil demand growth will slow dramatically as it's nearing its peak. Now, that would be a little bit different to what Shell thinks. It'll be interesting to see over the next couple of days and weeks and months what some of the oil experts were trying to get also head of commodities at Goldman Sachs on, to try and really give us a better idea of how and when this will stop. But the picture overall is really traders trying to brace ahead of a Fed pause. Does it mean that then they won't hike again in July, or are we back to hiking? What does it mean for cuts that were priced in towards the end of the year? The other story is, of course, sterling. We have a lot of focus on the fact that if you look at major central banks around the world, it's really the Bank of England with the governor, Andrew Bailey, that will struggle the most to get inflation under control. You can see sterling 126.17, and then just on the back of crude oil, you can see 75.08. That's $75.08. So we've gone through some of the cross-asset checks. Let's also talk about what else is going on, which is inflation. The one big thing that we've been focusing on, cooling U.S. inflation, may have sealed the deal for the Fed to pause its aggressive 15-month rate hiking cycle and assess what needs to be done next. Well, joining us now, Stephanie Niven, Portfolio Manager at 91. Stephanie, thank you so much for joining us. Now, there's a lot going on today, but the firm focused, if I can get my words out, it would help everyone, the focus firmly on the Fed. What happens after? Are you, first of all, expecting a pause today, and what happens after that?
Well, we're very much expecting a skip. So we see the Fed as very data-focused. We see them having factored in some of the interesting inflation data that we saw yesterday, and we continue to see them, doubling down on their policy and really responding to the data that's out there. And let's not forget, this has been one of the fastest hiking cycles we've seen. This is historic, and we will see that lag come through. But we really do see that we're on the upper end of that lag. We're on that 2-year kind of trajectory, and that's really a product of having seen low interest rates at the start. We're seeing a lot of the US on fixed rate loans, some of which have been refinanced in the post-COVID era. And, we will continue to see that effect trickle down. But we are by no means done. And the Fed will continue to watch that, and they will be data-driven by their response.
So, Stephanie, what kind of data are you expecting? If you look at inflation, it's coming down, and a lot of people are saying, look, it's coming down quicker than we thought, and actually the trajectory will continue. Do they really want to see 2%, or will they live with 3% inflation?
So inflation's coming down, but it's not coming down that quickly, and it's proving to be relatively sticky. That core level is still there, and that's still impacting the economy broadly. We continue to think that the Fed will look at unemployment rates, and they originally moved their expectations for unemployment in March. That moved from 3.5 up to 4.6, and those are the levels that we need to start seeing before we really think that the Fed will react. And let's not forget that the Fed has two key goals. It has to look at inflation, and it has to look at that unemployment level. And we need to start to see the Fed hold tight to that desire to bring inflation down. And also, I think it's important to consider that this inflation cycle has been very supply-side driven. This has not been overheated demand. And I think that changed the mechanism within the US economy. It makes it less clear, less transparent, the impact that those real kind of considerable credit tightening steps that the Fed have taken, to see them come through will take some time yet.
Stephanie, one of my great reads, actually, when I come in the morning is, of course, John Authers. Now, he says the great inflation scare reaches its final phase, and he says it's all about core services inflation. Do you care about the dot plots, or because it's so data dependent, it doesn't really make that much of a difference to portfolio managers?
We care a bit, but I'm going to be really interested in that commentary, and kind of, is that hiking bias still going to be there? And inflation's come down, and to keep pricing, keep growing through macro volatility. And we're pretty, clear that volatility looks likely to really come into the fore in Q4 of this year.
Stephanie, if you look, I don't know how much of a nightmare it is being at the Bank of England and have to set interest rates, but it doesn't seem like an easy task. What does it mean for how you look at the UK for investment destinations?
So the Bank of England has been kind of different in the way they've approached rates relative to the US, because they've been very forecast driven. So we see the Fed as data driven, and that's a fantastic way to think about policy. In the UK, we've been a bit slower and a bit more focused on, forecasts. And the Bank of England was one of the first to react. We saw them raise rates at the back end of 2021, which was, before the ECB and before the Fed. But the rate of those hikes have been slow. ECB has been very proactive and hiked very quickly, and we're beginning to see the narrative within the ECB, and we'll hear more from them tomorrow, but we're beginning to see that transition into persistence of high rates. And I think, in the Bank of England, there's still more work to do. That inflation level's still sticky. That needs to come down, and we need to see the Bank of England be a bit more tough and a bit more front-footed on that.
So what does it mean, for investments? Where do you want to be heavily invested in? We heard from Ken Griffin, which I have to say, it is always interesting, because he usually gets these things right. He's loading up on credit, and he's also saying, look, we could see a U.S. recession.
We very much share the view that a US recession seems likely, a consumer-driven recession in particular. And where we try to focus our time is on those stocks, those companies that have sustainability-driven structural growth. So some really interesting opportunities are related to the IRA in the US. So we're seeing, for example, waste management, which benefits from biogas tax credits. We're seeing Train Technologies, where there's real incentives and support for heat pump technology and other energy efficiency kind of products and services. And then within Europe, we're seeing energy efficiency names like Schneider Electric, where their energy management business is really, doing well in these sorts of areas. And, we can look more broadly. We're seeing microfinance, we're seeing, lending in India and Indonesia, really driving businesses like HDFC Bank, Bank Rakyat. And so there's a real broad kind of way to kind of play these structural growth themes that really have less to do with the macro. And I think that's where investors need to be if they're going to be in equities. They need to look at those businesses that have control of their own destiny, have the ability to price the products and services they produce, and grow through a macro slowdown.
Stephanie, thank you so much for joining us. Stephanie Niven there at 91 Portfolio Manager. Now, we did get some breaking news about 8 minutes ago, actually, from the IEA on how they're expecting oil demand to grow, and they're expecting growth to slow dramatically. Now, they understand, or they think, through their analysis, this is the International Energy Agency, that global oil demand growth will taper off over the next few years as high prices and Russia's invasion of Ukraine actually speed up the transition away from fossil fuels. That is not the view of Shell, as we heard this morning. On the contrary, Shell is boosting dividend as it pivots back to oil and gas. So there's an interesting juxtaposition there on various beliefs. Now, coming up, hydrogen is seen by many as the ultimate alternative fuel source, but so far it's actually failed to ignite mass market interest. So we'll look at where the technology stands and its chances of taking off in the future. That's next, and this is Bloomberg.
Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance, early edition on Francine Lacroix here in London. Now, we're getting a lot of breaking news, actually. UBS, on the back of finally, I would say it was in record time, but actually sealing the deal with Credit Suisse on Monday. This was regulatory things that just had to get done before they get into the nitty-gritty of integrating the two banks. Is coming up with some news that UBS has amassed around 1,200 private bankers in Asia, as the region has been spared a lot of the cuts. We know also that Iqbal Khan, the global wealth chief of UBS, had been betting on Asia, and that will continue to generate lucrative clients. One of the first stories that we reported on the back of the takeover of Credit Suisse by UBS is that he traveled to Asia to really try and get his top performers to stick with them. So UBS now planning to take on the bulk of Credit Suisse Asia private bankers. So it seems that their jobs are safe if they want to stay there. Now, let's get on to energy. And hydrogen has been billed by some as an alternative fuel that, if properly harnessed, can help slash global emissions and hit net zero targets. Automakers, including Hyundai and Toyota, have put their weight behind hydrogen fuel cell vehicles in recent years. Sales, though, have disappointed, raising questions about its viability as a mass market alternative fuel source. Now, we're joined by the TES Chief Executive, Marco Alverà, and Enapter co-founder, Vaitea Cohen, for a robust conversation on what happens next. So, Vaitea, Marco, thank you so much for joining us. Marco, you left, right, a big energy company to really focus on hydrogen. Are you, first of all, disappointed that it hasn't been adopted mass market? Is it a problem with technology or perception?
So hydrogen is not a mass market product. Hydrogen has to replace the heavy industry fuels, the shipping fuels, the aviation fuels. Europe has banned fossil fuels starting in 2035. We'll accept e-fuels. So every time you read the word e-fuel, that's hydrogen. So hydrogen, there's now consensus that hydrogen is going to be big. Hydrogen is going to be about 25% of the global energy mix. down the line, and it's getting cheaper and cheaper. So we just have to wait and go through the hurdles and the obstacles to getting there.
Yeah, but Vita, you have to believe in it, because even it needs to reach, I guess, critical mass before you really get proper investments in it.
Sure. I mean, I think we are absolutely believing it right now. We're scaling up our facilities at Enapter. We've broken record actually from Pisa, shipping 3 megawatts of electrolysis in Q4. We've built now a fully off-grid electrolyzer factory. We have more than 300 million in demand pipeline for a megawatt system. So we see the demand coming, and we absolutely believe in it.
But what's your order book looking like? And again, I don't know if there's a tad of disappointment that, it could always be better. And I don't know whether you were expecting it to go quicker than it is right now.
It can indeed go always quicker, right? But I think when we look at lessons that we learned from solar, right, it is about proving a technology that works, that is reliable, that is easy to service, and that costs are declining. And this is a lesson that we've learned with Enapter, deploying more units than any of our competitors, and that we're seeing that we're proving that our electrolyzers are working, they're out in the field, and that actually from an order book perspective, it's looking like a healthy one as well, from kilowatt and megawatt demand.
Marco, when you look at some of the money and the allocated capital and actually growing this business, even if it's not mass market, you probably need companies to start making bigger investments in terms of final capital allocation. When will that happen?
So the first very large project that we were happy to contribute to is NEOM in Saudi Arabia, $8.5 billion, 26 banks, I think 70% debt finance, that's producing green ammonia. Yeah. That's the first. There will be more. We're working on several projects similar to that. We recently announced a joint venture with Total, 50-50 project, to build a $3 billion facility in Texas. So for these projects to happen, they have to be bankable. That's the key word. For a project to be bankable, you need three things. You need the technology that Enapter is working on, and many others are. You need the clients to do the offtakes, and you need the banks to be willing to finance it. It sounds easy, but it's not so easy. And the real stumbling block is the offtake. How do you get customers to sign on the long term when there's so much uncertainty still on the subsidies? The IRA has been announced, but the details haven't been fully defined. The UK government is thinking about its own way to subsidize this, and in Europe, there's a lot of discussions. China is the leading market right now. That's where the bigger projects are happening.
Marco, is there going to be escape velocity at some point? So Bloomberg dedicates a lot of their reporters to try and crunch through the data. Yeah. And you have hundreds of hydrogen projects that have been floated by governments that have been applauded, but looking at the data, only 7% of those have the financing to start construction. So what needs to happen for that to change?
So they need to become bankable, to your point, and to the Bloomberg analysis point. And to be bankable, you need customers. And so the real problem is if you deliver a ship full of hydrogen somewhere, people don't know what to do it because the infrastructure is not there. Yeah. So there's a big chicken and egg problem. You build a hydrogen pipeline. I've been advocating for many years to build hydrogen pipelines. Now I'm shifting to say, because it's going to be so hard, and because the world went from being very rich 6 months ago with low interest rates to being a lot poorer in government language, we now need to think of ways to make hydrogen easier to adopt. So we need to convert hydrogen into something that people can start using today, whether it's e-diesel, e-kerosene for aviation fuel, or what we do in tests, which is ENG. We convert hydrogen to natural gas. That way you don't need any infrastructure. And that's the only way we can break this chicken and egg and get the projects to scale up. But there's a consensus now that hydrogen will cost below $1 a kilo, which is cheaper than fossil gas this decade if we get our act together. There's now a consensus in the US, in India, in China, in Europe.
Yeah, and this is if we get our act together. When you look at hydrogen, when can it really start credibly replacing natural gas?
Yeah, I mean, I think in Europe we don't lack ambition. We lack pragmatism and implementation. So at Enapter, at least, that when we look at our megawatt-size system, we are reaching this below 2 kilograms per euro with cheap electricity. So I think it is a question of speed, scale, and implementation. And so we are going as quick as we can to be able to reach this within this decade.
Is a lot of the money going to the U.S.? Is there a worry that actually Europe will lose out because the U.S. is implementing the Inflation Reduction Act with its own problems, right?
There's a big misconception. So the way the IRA subsidy is built and support is built is that you can build a project in the U.S. like we're going to do with Total, and you can bring the molecules made in the USA to Europe at a discounted price compared to the full cost. So the subsidy allows you to export, which is good news for Europe. Europe and the UK should focus on getting as much of that hydrogen into Europe as soon as possible. Then the other thing is that the subsidy is designed to incentivize local manufacturing. And so that's where governments need to collaborate more, because we should scale up the manufacturing. Because if we scale up the manufacturing, we accelerate the cost reduction. It took 15 years to get solar energy from 800 to 10 euros a megawatt hour. 800 to 10, 15 years. We can do the same with hydrogen and get it to below $1 a kilo if we speed up the scaling up of these factories. That's all we need to do, because the sun is there, the wind is there, and by converting hydrogen into fuels that you can put into trucks, into ships, into planes and factories today, we've kind of solved this chicken and egg dilemma with the infrastructure.
What's some of your biggest concerns? I know you're extremely ambitious in how much you're trying to grow and invest. Is it coming together?
It is coming together. I mean, I think one of the biggest bottleneck is policy and not technology, right? So all we can do is actually work on our technology, prove that it is reliable, prove that the orders are there, that we have the customers. So I think it's about really setting out the right framework, that there are faster zoning and permitting laws, that we are not just waiting for projects to go online, because the demand is there, our projects are ready to go live, and so are we.
Marco, I mean, the other thing that really caught my eye, and I was speaking to a big private bank that was saying, like, look, they're pushing everything on sustainability, not really because they believe in it, but just because the economics of it makes sense, that we're in a transition, it will accelerate, and we're not realizing yet. And then you wake up this morning and you read the headline that Shell is pivoting back to oil and gas. What does that mean for money, again, and capital going into renewables?
So once a project is bankable, as I said, the money flows, as we've shown with NEOM and many other projects. So the key is to produce hydrogen in a way that customers can buy it today, because if we don't have a customer investment decision, that's more important to me than the private banks or private equity or sovereign wealth funds, because the customer's balance sheet ultimately is what's going to finance this, like the gas industry has always operated for the last 50 years. So you need to create a product through hydrogen that customers can sign up to. Then the money will flow. But I think, to your point, there is a little bit of a hype. People probably were expecting it to happen faster. I've been writing about this for 4 or 5 years, and 4 years ago I thought it would happen in 15 years. Now I think we've gained 5 to 7 years through the IRA, through the speeding up of this in China. Japan is now committing to move from LNG to ENG, which is what we do, which is electric natural gas.
But a chief executive saying, like, look, they want to pivot back because they don't see peak oil. Does it change perception, capital?
I think the peak oil is probably moving further out, right. And the oil is generating a lot of cash for these companies. That's all cash that can be redeployed in the energy transition. And I was in the Kingdom of Saudi Arabia. I was in the UAE talking to the leadership there, to the energy ministers. They really see hydrogen as the new oil, and they're going to be investing and deploying billions. And whilst Europe and the US fiscally are in a poorer situation, these countries have all the capital to turn their deserts into hubs of hydrogen production.
All right, thank you both for joining us. Marco and Vaitea there at TES, Chief Executive Marco Alverà, and NAFTA co-founder Vaitea Kowan. Now we'll have plenty more, of course, on energy. We'll also talk inflation. Markets have priced a pause from the Fed for June, so we'll take a look next at the predictions for the Fed's rate path beyond their decision. That's next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus
after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, investors underpricing the possibility that the Federal Reserve will telegraph a higher peak rate with its new dot plot this week. Now, we love the dot plot. Love it or hate it. It's the one thing that you won't miss. Now, the Fed, a lot of people are saying it will have to revise its dot plot to acknowledge that it isn't done with the efforts to quell inflation. But actually, if you look at how interest rate traders are positioned, they're not quite positioned for the Fed to keep tightening, with meeting date swaps assigning only about a 70% chance when you look at the data of an increase in July. No hikes beyond that. Now, given that the Fed really has adopted a slowly approach to guiding the markets towards a higher and higher benchmark rate, the median may well show that the peak rate is 5.4%. So we'll look at the dot plot. We'll also look at what all of that inflation and jobs data means for the UK. Up next, we speak to a former chancellor, Mr. Zahawi. We ask him about politics in the UK and what it means for the Conservative Party.
Young person who might like to have a career like yours, what would you recommend? How can you prepare to be the national security advisor or to serve your government in some way?
The biggest piece of advice I try to give young people is to reject certitude. What I mean by that is that no matter how good you think your argument is, or your policy position, or your proposed course of action, it almost certainly has weaknesses or blind spots, and you should acknowledge those. I think actually sometimes saying, you know what, I was wrong, you were right, is actually a more powerful show of intellectual strength than just sticking firmly by your position. Doesn't mean you should compromise your principles or your values, but the easy decisions do not rise to the White House. The hard decisions do. And those hard decisions have two sides that are not 100-0.
Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
The Fed set to hold rates for the first time in 15 months as inflation continues to cool. European stocks mostly higher, with U.S. futures mixed. The UK economy bounces back in April to pre-pandemic levels, fueled by growth in services. Stubborn inflation hangs over sentiment. We'll be speaking shortly with the former Chancellor Nadine Zahawi. Plus, Donald Trump urges prosecutors to drop the charges against him after pleading not guilty to 37 counts pertaining to classified government documents. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bank of England Governor Andrew Bailey says the UK jobs market is very tight, with so few available workers that employers are having to hoard labor. Now, he told the Economic Affairs Committee why he thinks inflation is taking longer to come down than expected.
I mean, we still think the rate of inflation is going to come down, but it's taking a lot longer than we expected. So again, we have to introduce, we introduced an explicit, a sense, persistence of food inflation into the forecast.
Well, UK Labour leader Keir Starmer says political turmoil in the UK is affecting Britain's reputation. He also told me his party sees an opportunity to make gains in Scotland after what he's called the Scottish National Party's implosion triggered by a probe into finances. While I spoke to Sir Keir Starmer at London Tech Week.
We've burnt through 3 prime ministers. We've had 4 chancellors and 4 budgets in the last 12 months. And, politically, that makes for a lot of material. It is certainly evidence of chaos. And political parties usually fight like this when they're out of office. It's very unusual to have it when they're in office. And now we've got 3 by-elections caused by just political fallout.
Well, the UK economy bounced back in April after contraction in March. That says strong growth in the retail and creative industry sectors offset a slowdown in construction and manufacturing. However, stubborn inflation, of course, continues to hang over the economy, dampening sentiment. Well, our next guest has served as chairman of the UK Conservative Party, as education secretary, and last year as chancellor of the Exchequer. Nadine Zahawi, welcome to Bloomberg. I mean, what's going on with your Conservative Party? It seems like it's in shambles. It's a bit of a mess right now.
Well, look, there's been political drama before. When I was Chancellor of the Exchequer, of course, I took over from Rishi when he resigned from office and delivered the Mansion House speech and, of course, launched the next day the Financial Services and Markets Bill, which is about to receive royal assent end of this month, which will make this place, the City of London, again, the most competitive place to IPO, to come and build a business as well. So, yes, of course, we've had political drama and turmoil, but actually institutions in the United Kingdom are strong. The Prime Minister has a very clear strategy on halving inflation this year, growing the economy, and, of course, targets on the NHS, cutting those waiting lists and stopping the boats.
What's the way forward for the Conservative Party? It's very unusual to see this kind of infighting when you're in power.
The way forward is to halve inflation this year, to grow the economy, cut the deficit, of course, deal with the NHS backlog, and stop the boats. If we deliver those 5 promises, like we did with vaccine at my time when I was vaccines minister, you earn the right to be heard. in 2024 where we can return to a tax-cutting agenda at the right time. The economy is confounding the skeptics and is growing. But I think if you deliver those 5 promises, which Rishi is focused on, then I think the public will see beyond the froth, beyond the tittle-tattle, and see a Prime Minister that is actually delivering, rather than Keir Starmer talking about Scotland, yet he's about to put 200,000 Scots, mainly Scots, out of work because of his policy of no gas exploration.
So you're no stranger, of course, to some of questions and even some of the scandals, where it means that you had to step down. Are you on Team Rishi or Team Boris?
There is no team other than the government team.
What do you mean? I read the press.
I hear you, but there is a Prime Minister and a government strategy, which is 5 promises: halve inflation, grow the economy, cut the deficit, NHS waiting backlog, and stop the boats. Deliver those 5 promises. That's what your viewers want to see. They want to see inflation halved. They want to see the economy growing. It's in growth at the moment, but we need to do much better on that. And then you earn the right to be heard. In 2024, Rishi and the Chancellor will set out the tax-cutting agenda that I hope people will then vote for and we win in the general election.
How do you have inflation? I don't know what that means for a government to have inflation without a recession that could be induced by the...
Well, no, actually, the way you halve inflation is financial discipline, fiscal discipline, which is why the Chancellor and all of the Cabinet are committed to making sure that we have a fair and equitable public sector pay rise that doesn't embed inflation, because embedding inflation harms the whole economy and, of course, the most vulnerable people. So the government's role is fiscal discipline. Of course, the Bank of England has monetary policy. You know that.
Right, I do know that.
And the coordination of those 2 things, the coordination of monetary policy and fiscal policy, is what will deliver that inflation coming down. Because the best tax cut, actually, that you can give businesses is bring inflation down.
Yeah, it seems like a bit like of a nightmare, right, being at the Bank of England right now.
It's difficult. We've got war on our continent.
But do they have to put this country in a recession to make sure that inflation is under control?
Well, I think the important thing is that the country didn't go into recession. A lot of people said that it would, but Jeremy Hunt and the policies he put in place has meant that we haven't gone into recession. But look, it is difficult for us. There is war on this continent raging right now. We've put billions and billions into helping Ukraine and the Ukrainian brave military to defeat the illegal occupation of their country. That has a price, and the price is what we're going through in 2023, which is a spike in energy costs that led to higher everything from food prices because of fertilizer prices. All that has a cost associated with it. The way you deal with it is fiscal discipline, and then you return to tax cuts.
But is it almost impossible that fiscal discipline actually makes up for all the external shocks that you're talking about? Or are we talking about a catch-22?
Well, no one said 2023 was going to be easy. It's not easy anywhere in the world. You look at Europe, Germany, elsewhere around the world. None of these decisions are easy. When I was in the Treasury, we had to make difficult calls. We put in an energy package to help people just get through the energy price shock. That would have been about 150 billion if gas prices had remained high. Now, luckily, the gas prices have come down, so it doesn't need to be that large. But nevertheless, we put in 28 billion of help into households and businesses. That's the right thing to do. It's a difficult time on the European continent, no doubt. And the sooner that Mr. Putin learns that he has to leave Ukraine, the better.
Given the cost of living crisis, is now really the time to abolish inheritance tax?
Well, I think it's an inefficient tax. My role at the Adam Smith Institute is to fight for the ideas of the future. It's an inefficient tax. It's a tax that leads to, I think, distortions in investment decisions. So when you're getting to that stage where you're thinking about inheritance, you might decide to spend everything you've made and you've put into assets because you think, well, I can't leave it for my children or grandchildren. That's bad for the economy. So I think actually making those arguments and at the right time being able to demonstrate that you know how to pay for it, then you begin to deliver that tax-cutting agenda. My role at the moment as the patron of the Adam Institute is to be able to make those arguments for those ideas. It's up to the Chancellor then to look at those seriously.
But again, since you've been, part of the Conservative Party for such a long time, does this backfire? Actually, when you look at the polls and how badly the Tories are performing right now, is it something else that would make people turn to Labour?
I don't believe. Look, politics is the battle for ideas, and actually, if you look at the think tanks on the right of centre, are the ones that are coming up with the big ideas. Universal credit was an idea by Ian Duncan Smith and the Centre for Social Justice, a brilliant piece of work that has transformed the way we do welfare in our country in a fair and equitable way, and getting people back into work rather than people being trapped in a welfare trap. Those came out of think tanks like Adam Smith and others. So it's a battle for ideas. That's good for the nation. That's good for your viewers to hear Conservatives having the energy to come out with ideas.
Our viewers also want to know about the House of Lords Appointments Commission. Who's telling the truth, Sunak or Johnson?
Well, look, I haven't really been following this story at all because I've been focused on the work on the Adam Smith Institute and what we're doing here today with you at Bloomberg on AI with the Minister for AI who was appointed in 2017 in the UAE, Omar Al-Ulama, a great minister who's here talking to us about their AI strategy. So ultimately, all this stuff, I think we will move on from. What the government's focused on is those 5 promises: halving inflation, remember them?
Okay, well,
growing the economy,
I do remember them.
cutting the deficit,
in my brain.
NHS waiting lists, and of course stopping the base.
All right, let's see what can be done. Nadeem Zahawi, thank you so much for joining us, former UK Chancellor there. Now, coming up, the show goes on. Donald Trump returns to campaigning only hours after his arraignment in federal court. More on that next. And this is Bloomberg. So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a 3-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Donald Trump has urged prosecutors to drop federal charges against him as he continues to campaign despite being charged in a Florida court. Now, the former president earlier pleaded not guilty to all 37 counts in the indictment, which alleges he willfully retained top-secret documents and conspired to obstruct efforts to recover them. Let's bring in Bloomberg's Bruce Einhorn in Hong Kong. So, Bruce, what else happened at the hearing?
So, Francine, this was a hearing before a magistrate judge who allowed the former president to remain free until the trial starts. He also did not impose any travel restrictions or confiscate the former president's passport. He did instruct former President Trump not to discuss the case with any witnesses. That prompted some pushback from his attorneys, who complained that those instructions were overly broad. In the end, the prosecutors agreed to provide Trump's team with a list of people with whom he should not be talking about the case. As far as what comes next, the magistrate judge did not say when there would be a first trial date with the trial judge. Of course, in the U.S. system, the magistrate judge handles it at this level, but does not continue hearing the case there as a separate federal trial judge for that. We don't know when that will start, Francine.
So how did Trump actually respond after it ended?
Well, he continued with his criticism of the special prosecutor, Jack Smith. He continued with his criticism of President Joe Biden, saying that this is a weaponization of the justice system. He did try out what I think is a new argument here, saying that this was simply a matter of him just not having the time to go through all his boxes. He said he's very busy and just didn't get around to going through all the boxes to return all the classified documents. Of course, the prosecution says that they provided him ample time, that he willfully took the documents, refused to return them, and conspired to obstruct efforts to get them back. So what comes next? Again, we are now just going to have to wait and see when the trial date starts. Meanwhile, the former president does face some other jeopardy. Of course, there's the case in New York involving the alleged hush money payments to the adult film star. Special counsel Jack Smith is continuing his investigation into the events surrounding January 6th. The district attorney in Fulton County, Georgia, is also looking into Trump's efforts to interfere with the election there. So many more potential indictments ahead.
All right, thank you so much, Bruce Einhorn, there for us on the latest twists and turns. Now, some European banks could be facing a painful process. That's after the ECB will make lenders repay about €500 billion in cheap pandemic-era loans in one go. It will test the resilience of the continent's banking industry, and Italy looks particularly vulnerable. Now, joining us now is Bloomberg's Jana Rando in Frankfurt, of course, who leads some of our ECB coverage. Jana, always good to speak to you. So when you look at who's vulnerable, is it the small Italian banks, and would you bundle Greek banks with it?
Yes, so we are going to see a massive repayment of those loans at the end of the month, and indeed, Italy looks like the one place to watch, and that's just because the amounts do exceed what Italian banks have deposited at ECB in the past. So that is one indication. Yes.
I think we're having a little bit, we're hearing you in like Dolby Stereo, 3 times removed from Sweden, so we'll fix the audio because this is too important conversation not to fix the audio for, and we'll get back to you. Apologies for that, Jana Rando in Frankfurt. Now, we'll get back to Jan, of course. Also coming up, could there be a common currency for Africa? We discussed that hot topic coming out of the Bloomberg New Economy Gateway Africa Forum, so we're live in Marrakesh as well. This is Bloomberg.
Soros Fund Management CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg.
This cost of currency convertibility is a constraint to trade in Africa. And so we don't have a common currency yet.
Yep.
There is an objective to have a common currency, but in the meantime, we have introduced a tool that actually is a step in that direction, and that is payments for trade in based on a single platform for trade in Africa.
That was Vumele Kele Mene, the Secretary General of the African Continental Free Trade Area. Now, the idea of a common currency for African nations has been a key talking point at the Bloomberg New Economy Gateway Africa Forum. Let's speak to Jennifer Zabazaja, our Africa correspondent at the conference in Marrakesh. Jen, thank you for joining us. Great work on the ground. So tell us more about this proposal.
Yeah, Fran, I mean, when we think about it, when we look at the continent of Africa, there's about 42 currencies. And so what Wamkele Mele was really trying to stress to us is that the fact that there are so many currencies, any sort of cross-border payments at this point in time is really creating a hindrance for any sort of progress, especially economies that are already struggling with poverty and inequality. And so what he was saying there was that there's been a lot of discussion around potentially establishing a common currency that will get away from some of the biggest expenses that countries are currently having to deal with in terms of trade. And one stat that he pointed out to us that was really fascinating, African countries are losing about $5 billion annually just because of currency convertibility. So if this common currency were to be established, it could cut down on some of those costs and actually make this trading bloc, which is predicted to be the biggest in the world if and when it's implemented, a real competitor in the global economy, but still a long way to go. At this point in time, he was talking about the digital payment system that they have established and really touting a lot of the trade pacts that have been established, including with Uganda and Algeria and others. So a lot to pay attention to there as it pertains to the AFCFTA.
And Jen, you also spoke to billionaire Andrew Forrest, founder of Fortescue Metals Group. So what did he say?
Yeah, I mean, as we know, Andrew Forrest has been a champion of green energy across the world. But really, the fascinating thing about him being here in Morocco is really how ambitious and bullish he is about the potential for this region. Take a listen to what he told us when we asked him specifically about why he is betting big on Africa.
For those companies and those governments who are not listening, particularly to the people of North Africa, who know this is their shot, this is their time to be supported, this should be their projects. Let's get in behind North Africa. Let's get in behind Africa. Let's give this beautiful continent its shot and its green.
Yeah, so Fran, that was just part of what Andrew was telling us. And he really said that he is himself seeing a lot of the leadership in countries like Morocco and Gabon and Kenya and Egypt really step up and approach Fortescue for their own green success that they've had. But he thinks that there are still a number of companies and international players that are getting in the way of Africa really being a leader in this space, not just for the continent, not just for the climate change issues that they've dealt with, but also potentially for Europe. So he was really trying to double down on the fact that people need to let Africa step into this green revolution and establish their own green economies going forward.
All right, Jen, thank you so much. Jen Frizabazaja there with the very latest, of course, from our great event in Marrakesh. Now, let's return to a story we told you a little bit about earlier. Some European banks could be facing a painful process. That's after the ECB will make lenders repay about €500 billion in cheap pandemic-era loans in one go. And joining us now, we fixed the audio. She's raring to go, Jana Randau in Frankfurt. Jana, how problematic is it for the smaller banks?
It is certainly a challenge, and that has to do with the fact that if you look at Italy specifically, that Italian banks currently have less money deposited, less cash deposited at the ECB than they have to repay at the end of the month, and that tells you that something needs to be fixed, and that's what the attention is on at the moment. So that is a problem for Italy. In Greece, we have about the same amount of cash deposited as is due for repayment. Of course, that's only aggregate figures, so you don't know what's hiding underneath, which institutions, which banks might have a challenge there. But let me also say that it's certainly something that's fixable, right? Banks have many options to raise that money, that funding that's necessary. Not least because there is still a lot of excess liquidity out there. So we're looking at about 4 trillion of excess cash sloshing around the financial system at this point in time. Repayments are just under $500 billion. So certainly a challenge, but at least what we heard from the ECB so far, they're looking at this obviously, but we haven't seen any indication that the ECB sees any need to step in and offer additional operations, to offer longer term facilities, replacing some of that cash. So there is, they're looking at this. And from what we hear, there is no greater sense of alarm at this point in time. And obviously, we're going to hear from the president later this week on Thursday, tomorrow, actually. So that's definitely something she has to answer. Yes.
Yeah, I was going to say very quickly, we're running a little bit out of time, but what's the worst case scenario right now?
Well, the worst case scenario is that banks struggle, that banks will need to return to the ECB's standing facilities. They have weekly and 3 months operations on offer at all times. And of course, if you are as a bank forced to tap those, money is available there, so it's not a problem of getting it. But it could be a stigma that some, there will be some finger pointing if banks cannot secure funds in the repo market, for example. But at this point in time, we're hopeful that everything will go right.
Jana, thank you so much. Jana Randau there in Frankfurt. Now, coming up, we'll have plenty more Bloomberg Surveillance Early Edition. Of course, it's Fed Day, so happy Wednesday, everyone. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point!
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Moment news breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. It's the countdown to the Fed's decision. Markets bet on Chair Powell to deliver a pause in rate hikes as data suggests inflation is slowing down. The UK economy bounces back. The latest GDP data showed a rebound in April after a decline in the previous month, with the service sector driving gains. And Donald Trump fights back, the former president urging prosecutors to drop the legal charges against him in a speech following his Miami court appearance. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. And Kriti, modest gains across European equity markets. We are waiting, of course, for the Fed. We've got the CPI data. We'll move on quickly to what that means for the Federal Reserve.
Yeah, modest gains in the U.S. session as well, and I think you're starting to see a lot of that come, not specifically around the Federal Reserve, but I have to say some of the micro stories in the absence of that macro narrative that we are still waiting for. Remember, the market consensus at the moment is that we are going to see a Federal Reserve that actually pauses today, and that is going to be crucial. Again, as we look at what happens to the bond market, we're going to get to that in a moment, but the real outperformance you're seeing is in those tech shares. The NASDAQ 100 futures higher by 0.2%. The bond market, on the other hand, seeing a very small bid, especially on the front end of the curve. We're looking at 464 on the 2-year yield. But for radio audience, bear with me because I also put the 10-year yield up here. And this is important when we talk about the spread between the 2s and 10s curve. We're looking at about -85 around that level. And that's significant as we talk again about this curve kind of going on its way to uninverting. And what does that tell you about whether or not the Federal Reserve needs to be cutting? How is the market thinking about that? That's something we're going to be digesting throughout this show. The 10-year yield, nevertheless, at about 380 on that note. To me, what's interesting, though, is going to be the FX story. We are seeing broad weakness in the dollar this morning, but remember, we are also on policy watch from China, from the BOJ, and of course from the ECB as well. But to me, I think the biggest currency pair to watch right now is dollar yuan, specifically because we did get that small policy cut yesterday as well. Small, but surprising nonetheless. So really to kind of firm up that thinking, a lot of attention being put on the MLF decision on Thursday, which again is going to really impact just how much weaker, Anna, the Chinese yuan gets.
Yeah, absolutely. How weak will the data be when we get it from China tomorrow, and what will the policy response be? Certainly very live questions. This is the European picture then, Critty, looking pretty positive across European equity markets. Modest gains coming through in London, better gains coming through in Paris, in Germany, certainly over in Italy, where we see bank stocks doing pretty well, up by 1.25% on the FTSE MIB. Let's dive beneath the surface and have a look at some of the other dynamics, because we've dealt with a lot of UK data over the last couple of days. We had a really tight labour market once again being flagged in the labour market data yesterday. We got an in-line, back to pre-pandemic levels story around GDP this morning. So all of that data playing in to the UK assets, and the UK two-year yield, I put that in because yesterday we saw outsized moves higher in UK yields across the gilt curve. We saw bigger moves than we saw in other parts of Europe, and it really was factoring in just how many hikes we're going to get from the Bank of England, given how persistently tight the labour market remains. Well, today things look a little bit different. We see those yields coming down a little bit, but again, in contrast to the rest of Europe. On that labour market story in the UK, really interesting to look at this mid-cap stock, Robert Walters. It's a recruitment business. It puts people in jobs, and they are talking very negatively about what they're seeing in the market. So does this give us micro clues as to the macro that we've been expecting, but has to this point remained elusive? That is a loosening of the UK labour market story. That's stock down by 12.7% as they talk about candidates being more nervous about moving jobs and it taking longer to get those hiring processes through. This is Shell, not moving much, but they have an investor day and they've said that they're going to reduce capex and increase dividend. The dividend increase wasn't as much as many in the market expected, but it was the plan around capex apparently that sent the share higher this morning. And Brent crude up by 1%. We've heard from OPEC, we've heard from the IEA around the supply and the demand stories that they expect to see unfolding on oil. We've also, in our own reporting, been talking about what the US government is doing with its strategic petroleum reserves. So a lot to watch there at $75 on Brent.
Certainly something we're going to be keeping an eye on, but let's get a little bit more analysis on that European story. Specifically, Anna, the UK data that you mentioned showing that the economy bounced back in April. Joining us now to break it all down, Bloomberg Economics' senior UK economist Dan Hansen joins the program. Dan, one of the major topics at the IMF spring meetings this year was just how long the recovery in the UK is going to take, and some people said it would take years. Is today's data a little bit of optimism amid a lot of gloom when it comes to the UK?
Yeah, I mean, I think it's really interesting what we've had today, and particularly what we've had over the past 6 months. I mean, the UK economy has done far better than anyone had been expecting, say, 6 months ago, where you had all this talk of a 1990-style recession, a peak-to-trough fall in GDP of about 2 to 3%. So far, the economy hasn't fallen into recession. We've had broad stagnation. Now, of course, that isn't a great story, but compared to what we were expecting, as I say, 6 months ago, it is significantly better. Of course, the flip side of all of this, and Anna was mentioning it there, is that we've still got a very tight labour market in the UK because demand for labour is holding up. And that's feeding through to the inflation story, which, of course, gives the Bank of England ever-increasing headaches.
Yes, absolutely. Good morning to you, Dan. Let's go on to that, what this means, because as you say, as we've been discussing, tight labour markets, inflation above 8%. Where does all of this leave the Bank of England?
Well, I think the combination of April CPI data, yesterday's labour market data, and to some extent what we've had today, a June hike looks nailed on, so next week. We think they'll hike again in August. The market, of course, is pricing hikes all the way to December and a peak rate of 5.75 in February. But I think the thing here for the Bank of England is that it has to recognise that it's going to have to push harder, quite significantly harder, on the UK economy.
So we could get a 50 at some point?
I don't think they'll go for 50 simply because I think that will look like they're panicking and they've lost control. Rates are already very high. There's going to be a lag in terms of the impact coming through. But I think you can debate where the peak rate might be, but I think the really key point is that rates are going to have to stay at that peak rate for a long time to push the economy down and bring inflation down.
Certainly something we're going to be watching, and the ripple effects around policy for the rest of the world. Dan Hansen of Bloomberg Economics, thank you as always. Sticking with the economic story, except perhaps this time on this side of the Atlantic, the latest U.S. inflation data supporting the case for the Federal Reserve to pause their run of rate hikes. Here's what some of our guests had to say looking ahead to that decision.
we got a strong core print.
It was a good report.
This is a step in the right direction.
Inflation is coming down. The Fed has to be pretty happy with these numbers.
It takes away some of the pressure for the Fed.
That should buy them more time to keep watching the data.
I would vote for wait and watch.
It doesn't look like they're going to need to hike this week.
The skip is priced in. Definitely a skip.
It is sort of a grudging skip, if you will.
I think it's a skip at this point, and I think it's going to turn into a pause.
Turns into a pause after that.
They're likely to go one more time in July.
Doesn't look like they're going to need to hike in July.
They're going to be communicated that they have to be flexible, that all options are still on the table.
So a variety of takes on Wall Street. The equity market, on the other hand, cheering the inline U.S. CPI print that we got yesterday. The S&P ending the session pretty solidly in the green. Then you look at the bond market, did not handle it just as well. Yields jumping as the expectation for Fed cuts later in the year priced out of the market. Let's get to our markets reporter, Valerie Teitel in London. Valerie, walk us through the price action yesterday. What might we expect today?
The price action yesterday was quite bizarre. It made sense in the equity market, almost a sigh of relief. We don't get any last-minute change of communication from the Fed ahead of today. But the bond market really did not like this print. Yesterday, I had to do a double take. 5-year yields at one point were higher by 13 basis points. Now, a lot of eyebrows were raised as to why this was. Some saying that the bond market was maybe a bit rejecting the idea of a pause, saying if the Fed's going to pause tomorrow, I'm going to expect more hikes later. Or maybe all of a sudden we just woke up to the idea that higher for longer really is a real phenomenon. We had all those cuts for this year completely priced out. If you look at what happened in the November and December pricing, we're no longer pricing cuts out to the end of last year. Perhaps this is just what a bond bear market looks like, and we get sell-offs like this. You know, we've not been in a bond bear market for the last 40 years. Maybe we should just get used to sell-offs rather than rallies. But it made me do a double take on make sure I didn't miss anything from the U.S. inflation print. Broadly came in line. The core CPI year on year came in slightly hot, but that was almost completely dismissed. It was down to an anomaly in used cars, which we know is going to fade. But the core CPI came bang on month. You just have to raise an eyebrow. Why was it this print that made the market believe that higher for longer is here?
Yeah, really interesting dynamics then in bond markets yesterday, Valerie. Now onto the Fed's decision. What is the big thing that you're going to be watching for?
Look, now that the pause is a near certainty, it's going to be all about the dots today that will be released as well as with the decision at 2 p.m. Now, if they match the March dots, that essentially is telling us that there are no more hikes in the cards, that would be a dovish reaction. But the thing to watch out for is, do they shift higher? Do they shift higher by 25 basis points, showing they're one more hike for the rest of the year? Or perhaps the more hawkish outcome, they shift higher by 2 more hikes. The other possibilities to watch, or is the dispersion going to widen? We know that there's been some bit of battling between the hawks and the doves just in the last month, which is really the first time this cycle we've seen some disagreement. Perhaps, and just perhaps, they keep the dots very similar, but focus on the 2024 dots, maybe shift those higher in a bid to say, we're at the terminal rate, but we intend to stay at this terminal rate for a bit longer than you expect.
A lot to digest there, and you can already see a little bit of game theory being played out. Bloomberg's Valerie Teitel is always walking us through what we might expect in just T-minus about 9 hours over in Washington, D.C. I want to stick with the D.C. story and switch a little bit to politics here. Donald Trump pleaded not guilty to federal charges on mishandling classified materials. Trump insisted on his innocence and urged prosecutors to drop the case. He flew to New York following his court appearance in Miami and gave speech to a room full of supporters at his Bedminster Golf Resort in New Jersey last night.
The seal is broken by what they've done. They should never have done this. This was an unwritten rule. You just don't, unless it's really bad.
Joining us now, Bloomberg's Rosalind Matheson. Roz, a lot to digest when it comes to what the former president's implications are for the 2024 bid, but walk us through the takeaways here from the legality perspective, but also just in terms of what his response was and the kind of support it drummed up.
Well, what we're seeing is he's starting to lay out his arguments for whatever time he does end up in court on this, and basically saying that he's been singled out for unfair treatment when others have also, of course, found that they've had classified documents in their personal space after they've been president, namely Joe Biden. He's saying, why is he the one who's been charged in this when others have not. Of course, Donald Trump has accused others of bad behavior himself previously, including using personal email servers. So he's laying out some of his arguments here, using language more commonly associated with Pearl Harbor. This day, he said, will go down in infamy, the day he pitched up in court yesterday. It's going to be a long-running process. There's no date set for when he now has to appear before a South Florida District Court judge. The judge is going to hear all of this. He's free to travel, free to do what he wants in the meantime. And so this could go for quite some months and run really heavily into the US election calendar. Of course, we've got the president election coming up in the latter part of 2024. This legal case could still be going on then.
Okay, and let's think about what this means for the broader US political scene then, Ros, and the race for next year, or rather the Republican race to get there.
Well, that's right, and it's a really crowded field already on the Republican side. Many, many candidates jostling to be named. We'll get into the sort of the primary season before too long, and that crowd will obviously start to narrow. The question is, how do some of those other candidates potentially maximize this moment? Trump obviously is seeking to use it to rally his base, his key supporters. He's giving those speeches to people who've been his long-term supporters, but can he really retain the moderate Republican base at the same time, or is it just going to be that core bunch who've supported him all along? He's trying to raise more money. He is in front in polls, of course. He's got the advantage here, but can he keep it through the many months ahead? Some of those candidates may move to try and peel those moderate Republicans away from him, and they're really the ones who are going to matter come Election Day.
Okay, Ros, thanks very much. Rosalind Matheson joining us there with the latest on US politics. Coming up, we'll be back to the markets. We'll be talking FX with FX strategist Sonia Martin of DZ Bank. We'll also speak to Aaron Captain, Global Chief Economist at UBS. What did he make of the link between CPI, or lack of it, and the Fed's decision later on today? We will get to that analysis shortly. And we go to the Bloomberg New Economy Gateway Africa Forum. That's taking place in Morocco. We'll speak to the Visa Executive Chairman, Alfred Kelly. That conversation later this hour. And happening right now, Bloomberg's Jennifer Sabasaja is speaking with the founder and executive chairman of EcoNet Group, a telecommunications company, at that same event, the Bloomberg New Economy Gateway Africa. You can continue to watch that conversation on Live Go on the Bloomberg terminal. This is Bloomberg.
Here in Morocco? Yeah, we're going to build some data centers here too. So we are building a lot of high capacity.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
It is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, it's decision day. The Federal Reserve looking to have yet their other decision announced in less than 9 hours. Now, what does this mean for the markets here? We're like a potential positive equity reaction, a potential positive bond reaction, just given that the market has been guided to believe that they are going to pause, see where the data takes them, and then reconsider a potential hike at another point this summer. But what does that mean for the FX story? And I think positioning is really crucial to talk about. For our radio audience, stick with me. We like to revisit this chart often on the show. It really shows the dollar positioning that you see from a lot of these kind of speculative funds. And right now, you're seeing that net positioning on the dollar lose a little bit of momentum. You saw this buildup going in the last couple of months. A lot of that had to do with the debt ceiling debate, the banking turmoil. If you are worried about the global economy, you go defensive. You hop into U.S. assets, and that includes the dollar. But that is starting to lose a little bit of its charm, especially as we talk about potential cuts being priced into the market or priced out for that matter, as well as the Federal Reserve ending its tightening cycle. Again, potentially anything can happen this summer. Let's bring in a true expert at where you go with the greenback. Joining us now, Sonia Martin, head of FX and monetary policy research over at DZ Bank. Sonia, thank you as always for joining the program. Talk to us a little bit about the dollar story here. What is driving that trade?
Well, as you said, I mean, there's a lot going on at the moment, and the main focus obviously is on the Fed decision. You discussed it early on in the program. The market is looking for the Fed to pause at this meeting, but there are a lot of question marks about the next meeting before the end of the summer. And there's some speculation that the Fed may have to hike again. The thing is, at this point, I think, we are talking about the potentially last rate hike. It's sort of the insurance rate hike, if they did hike again, the last one in the cycle. I don't think anyone really expects the Fed to continue hiking, in the autumn. So to be honest, I'm not quite sure if I feel that this last rate hike, whether it comes or not, is really the deciding factor. And I think when you look at the Fed today, they would have to be, I think, very, very hawkish in order for the dollar to actually benefit from this meeting today.
Sonia, good morning. If we get the pause from the Fed then, it's been a long time coming, hasn't it? We're a long way off our highs on the dollar from October 22, when the market first started to think about what would happen if the Fed paused or indeed some kind of pivot. What is the trajectory for the dollar from here then?
I think we're still looking at a weaker dollar. I mean, not dramatic, because let's face it, things aren't exactly looking bright and sparkly on this side of the Atlantic. So, this is not a very aggressive view, but we're looking for euro dollar to rise up towards the 115 next year. We've been quite close to this, but obviously at this point below 110. But the main driver behind the story really is that the Fed is done hiking. It will begin to cut rates next year, early next year. And also, let's not forget that while the economy is looking surprisingly resilient so far, if you look at the lead indicators, it does show signs of weakness. And that is probably going to come, really into the foreground as we move into the autumn of this year. And I think that is going to put some pressure on the US dollar.
And Sonia, so you talk about 115 on euro dollar. Is that to do with interest rate differentials? Is that because the ECB keeps hiking as the Fed pauses? What drives us to 115?
I think the interest rate differential isn't the most deciding factor. I mean, it does play a role, but let's face it, the ECB will be hiking 2 more times, and then they will be done as well. And of course, the Fed has already done so much more than the ECB. So that does play a role, but I think the monetary policy divergence isn't as big by itself. I think it's more the growth story at this point, because when you look at recent weeks or months even, the US data has almost consistently surprised to the upside. So people have still have recession in the back of their mind, but it's not really priced in right now. In Europe, it's the opposite, right? We have had a string of softer than expected data. So I think the turnaround in the growth story, that's going to be the main driver, because the US is going to perform more poorly and the Eurozone should be performing somewhat better.
Sonia, where does the UK fall into all of this? When you're looking at the pound, for example, these massive moves that you were starting to see, how do you square what the BOE is thinking about versus the ECB versus the Federal Reserve?
Well, I mean, the BOE is in a really, really tight spot at the moment. And they're really in a situation where, let's face it, the Fed has already been really high inflation, tightening of monetary policy that doesn't seem to be doing anything to dampen price pressure significantly. And then, of course, you get to this point now, and I think this is where we're at, where, the fundamental picture is still so relatively solid labor market. We saw this yesterday, which means that the Bank of England has to continue hiking rates to combat the inflationary pressures. But in doing this, they will obviously risk a fairly rapid economic turnaround to the downside in the future. So this is a really difficult time for them.
Sonia, thanks so much for your time. Sonia Martin of DZ Bank, thank you very much for joining us. For more market analysis, you can check out the Markets Live blog. MLIV Go is the function on the Bloomberg terminal. You'll find analysis of the CPI, ahead of the Fed, all that on the blog. This is Bloomberg.
Covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Ken Griffin is increasing his focus on credit trading as he braces for a potential U.S. recession. He, however, is more upbeat on China, where he expects growth to surpass the government's targets. As for the Federal Reserve, the Citadel chief sees one more hike this year and then an extended pause after that. Some interesting calls, Anna, coming from the chief over at Citadel, but I think the timing is everything here because he said he's more concerned not about 2023, but 2024.
Yeah, he is anticipating a US recession. I thought the credit call was interesting in that regard, but he is talking about long and short positions on credits. We'll watch that one. A wide-ranging conversation there with Ken Griffin. Coming up on this program, we'll get back to some of the macro trends, the economic trends. Aaron Captain joins us, global chief economist at UBS. Is he anticipating a US recession? What does he expect from the Fed? This is Bloomberg.
City, a $100,000 salary feels like just $36,000. That's according to a new study that looks at 76 of the largest U.S. cities to see where $100,000 goes the furthest, after taxes and after accounting for the cost of living. For many, reaching a six-figure salary is a huge moment when you feel like you finally made it. But that feeling may not last long when you realize just how much taxes and the cost of living in an expensive city takes out of your paycheck. And that's especially true after 2 years of inflation. Hybrid and remote work have opened up so many more opportunities for people to choose where they live. So that forces the question, should I stick it out in an expensive city or try to find somewhere more affordable? So where should you live if you want to maximize your salary? Consider Memphis, Tennessee. The home of the Blues topped the list with a take-home pay of about $86,000. Tennessee doesn't have an income tax, and the cost of living there is about 14% cheaper than the national average. So a dollar there takes you much further. Texas is another popular choice, and it's clear why. 7 of the top 10 cities where $100,000 goes the furthest are in Texas, a state known for low taxes. Of course, there are so many factors that influence where you choose to live. You may want to be at the center of things, or be near family, or be somewhere where there are a lot of career opportunities in your field. It's not always just about dollars and cents.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. It's the countdown to the Fed's decision. Markets betting on Chair Powell delivering a pause in rate hikes as data suggests inflation is slowing down. The UK economy, it bounces back. The latest GDP data showed a rebound in April after a decline in the previous month, with the service sector driving the gains. And Donald Trump fights back, the former president urging prosecutors to drop the legal charges against him in a speech following his Miami court appearance. I'm Krita Gupta in New York with Anna Edwards in London. Look, geopolitics at the forefront. So is the Federal Reserve, though. And I have to say, it has to be the central bank decisions that are driving the trade, not just today, but all week long. You've got the Fed today, the ECB, the BOJ, and some interesting stuff happening over at the PBOC as well.
Yeah, absolutely. Perhaps bookmarked by activity at the PBOC. We'll wait to see what we get delivered tomorrow on that front. This is the picture across European markets as we are post-CPI, pre-Fed. We are up by 0.5% on the stocks Europe 600. Real estate stocks doing pretty well today. That seems to be one of the better performing ones throughout this morning's session. Interesting to see UK assets on the move. Kriti, you talked in the headlines about that bounce back in the UK GDP story. That gives headaches, though, to the Bank of England that wants to loosen the labour market and drive inflation back down from the 8% and and a higher level. This is the UK 2-year yield. Not sure it's responding really to the data, but perhaps actually to yesterday's data and to the big outsized moves higher we saw in yields in yesterday's session. So yields went much higher yesterday. Today we see them come down just a touch. Were they responsible actually for dragging some of the other global bond markets around? That's an open question. Robert Walters is a recruitment business, mid-cap here in the UK. But it's interesting for us because of what it tells us perhaps about the macro picture. There is a really tight labour market here, but are we seeing some cracks emerging in the Robert Walters story? They're talking about candidates being less enthusiastic about switching jobs or less confident to do so, and it taking longer to fill those or to complete those recruitment processes. So all of that adds up to a profit warning for that business, and the stock down 14%. Shell, a little bit of a move higher there, up by 0.4%. They've got an investor day, Chrissy, and they're talking about cutting back on capex, and it's that headline that seemed to please investors and got some positive response from analysts.
Certainly a story we're going to be watching, especially when it comes to the read-through into the United States. But Anna, that green on the screen you mentioned in Europe, you're seeing that in the U.S. as well, which is interesting because on Fed Day, like today, you tend to see a little bit of cautious nature to trading before the actual decision itself. Essentially, the first 2 days before the Federal Reserve decision, even the morning of, tend to be negative only for the market to rally. And the idea here simply is that that means that the Fed has then guided markets to exactly what they're thinking, so they then buy the news. That being said, you are seeing far more optimism baked into today's Fed decision. In fact, a lot of outperformance by the tech-heavy NASDAQ. The NASDAQ 100 futures higher by about 0.3%. If you're looking at the S&P 500 futures, also higher by about 0.2%. So again, seeing a little bit of green on the screen. I wouldn't call it major momentum, but a little bit of optimism, more so than we've seen on past Fed days. But the bond market, look, it all comes down to that. The 2-year yield, 464, seeing a move about 1 basis point lower on the front end of the curve. I'm throwing the 10-year yield as well up here, 380 on that benchmark, also down about 1 basis point. The spread between the 2s and 10s is crucial here because we have started to make our way towards uninverting, if that's a word. And the crucial piece of that is how much of a signal is it? We're going to talk to an economist about that in just a few moments. But again, the ripple effects are crucial because if you're talking about the 2s, 10s uninverting, what does that mean for the FX space, which then brings us to the dollar? Seeing a little bit of broad weakness for the dollar here, some strength against the offshore yuan. Anna, you mentioned that we're going to see that crucial MLF decision tomorrow. What does that mean for the Chinese story and how it feeds into the U.S. story? Something we're going to keep an eye on very closely in the next few days.
Yeah, global central banks certainly in focus this week. Let's get a global chief economist perspective. Aaron Captain joins us from UBS. Aaron, so nice to have you with us and to get your global perspective. We'll start with the Fed, though, because that's the big event of the day, of course. You're expecting some action on the dot plot, possibly the mention of a July or the indication of a July hike there. Will that be the last from the Fed?
Yeah, so all the information is going to be in the summary of economic projections. So they have very consistently since September of last year maintained the real Fed funds rate in their summary of economic projections at 1.5%. And so if today they raise the inflation forecast by about 30 basis points, you should expect the median dot to go up by about 25 basis points. That's been sort of the consistency. It's also what triggers the cuts, right? So in their forecast, when inflation goes down next year by 100 basis points, they cut by 100 basis points. So you have sort of a framework to analyze the reaction function. If today they simply lift the dots by 25 basis points and inflation by about 25 basis points, you know that nothing has changed on the reaction function. So that is the thing to watch for. If they do more than that, then obviously there's a change. Now, we don't think that's likely, but that's sort of the way we're thinking about those dots.
So a lot of focus on what happens today, what they signal for July, a lot of focus on when they start to cut, as you flagged there, Arend. I mean, what will trigger the Federal Reserve to start cutting? Will it be enough to just see inflation not at such elevated levels? Will it have to go below 2% to see the Fed cutting? Will the outcome in the economy, some weakness in the labor market or underlying recession dynamics, will that be the thing that triggers a cut?
Yeah, so the interesting thing in their own forecast, they're medians, but in their own forecast, is that you do not need inflation at 2% for them to cut, right? So if they are truly managing a real Fed funds rate towards a level of about 1.5%, then as inflation comes down, they want to avoid being overly restrictive. So this is not inconsistent with the high for longer narrative. All that needs to happen is we need to get some disinflation that goes beyond what they're expecting by the end of this year, right? And so that's basically what the TIPS market is pricing. That's what a lot of economists are forecasting. That's the first part of the reaction function. That sort of starts the cuts. We think that starts in December, but that's the first bit. The second bit, which is really, how do you get below neutral or how do you do more than the market is pricing? That requires, we think, a recession. And so we have that in the forecast, but that comes later. That is not for the first cut in December.
What does that then do to something like the Fed's credibility, though? They've been so kind of tied to the narrative that cuts are not in their future, that they're really going to go hard on inflation. I mean, I'm curious how they're even going to navigate a potential pause, if that is what they deliver today, at a time when credibility for the Federal Reserve is really in hot water. How are you thinking about that if we do end up getting a pause today or a cut by the end of the year?
Yeah, so one problem for them is I think they've tied themselves to jolts and payrolls, and obviously they're still running quite hot, and so it looks like they haven't done their job, and so hence they need to keep going. So they're a little bit trapped by that narrative. But on the inflation side, I think Powell's been quite open in the past press conferences that he's been asked the question, what if effectively the tips market is correct and we get much more disinflation sooner? He said, well, then we can obviously change our mind, and I think through that dot plot, they have consistently sort of laid out their framework as to being responsive to inflation coming down. Now, the other interesting thing, from the next sprint onwards, we are going to lose about half of the core inflation momentum for a whole series of months. And this is basically just the flip side of what happened in Q4 last year, that they changed all the seasonals. And so if nothing else changes in underlying inflation dynamics, then from next month onwards, we're printing 20 basis point core CPI prints rather than 40 basis point core CPI prints. They will start to accumulate that sequence of lower prints throughout the summer, and that is going to give them cover to only deliver the July hike and then sort of nothing beyond that.
Aaron, we've also got an ECB meeting this week, of course, tomorrow, in fact. The market is expecting a hike and one more maybe after that as well. Away from the hiking, though, we've also got some other dynamics to watch. What do we need to know about TLTROs? So this is the cheap loans that the ECB gave to banks over recent years. What's changing there? I'm thinking about this because I see Italian bank stocks doing really well today.
Yeah, well, it's sort of curious. That's sort of curious because if there is going to be a problem on the TLTRO repayment, it's really in places like Italy, Greece, where the outstanding TLTRO balances exceed excess reserves. So those markets will be drained of excess reserves. You could get some fragmentation in monetary transmission, which I think the ECB can deal with later. But yeah, so the big surprise, I think, relative to what the narrative was 8 weeks ago in the middle of the banking stress, was that the expectation we had, and I think they were signaling that through their press releases, was that the bar was incredibly low to roll the TLTRO cliff, right? They've got a bit under 500 billion falling due. And so they were basically signaling, look, if the banks come and ask us and they can't find term funding, then we can do a new facility. We just roll that money. It does not look like they are going to do that, right? So the money gets repaid. We think about 600 billion gets repaid because also some of the rest that's falling due this year. And that's really a signal that, in my mind, that's a signal that they do not feel terribly concerned they're overly restrictive yet. And so while obviously they're just going to deliver the June and we think the July hike, through QT and through the TLTRO, I think they're really signaling that there's an asymmetric skew in the reaction function, that there's a risk that they need to go beyond July. And I think a lot of the banks, including us, have been highlighting that.
Aaron, thank you very much. Thanks for joining. Aaron Captain of UBS with the Global Economic Outlook. Coming up, we go to the Bloomberg New Economy Gateway Africa Forum. That's taking place in Morocco. We'll be speaking to the Visa Executive Chairman, Alfred Kelly. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
For those companies and those governments who are not listening, particularly to the people of North Africa, who know this is their shot, this is their time to be supported, this should be their projects. Let's get in behind North Africa. Let's get in behind Africa. Let's give this beautiful continent its shot and its green.
Fortescue Executive Chairman Andrew Forrest there speaking with Bloomberg's Jennifer Zabasaja at the Bloomberg New Economy Gateway Africa Forum in Marrakesh, Morocco. Jennifer joins us now to bring us yet another interview from the forum. She's joined now by the Visa Executive Chairman Alfred Kelly. Jennifer, take it away.
Yeah, Kruti, thanks so much. I'm joined here by Al Kelly, the Executive Chairman of Visa, as you mentioned. Al, thank you so much for being here. We just heard from Andrew Forrest talking about his doubling down of the commitment of Africa. Visa is also doubling down with a $1 billion commitment to transform this continent. Talk about that and why it's so important to you.
Well, Jennifer, good to be with you. I think this is one of the most exciting places in the world. And by 2050, you're going to be 2.5 billion people. And it has made so much progress, but yet there's so much opportunity ahead of us. And so we have, we're looking to expand our operations here. We're looking to extend the amount of innovation we bring to the marketplace. We want to increase the collaboration that we have with so many different players who play very intricate and important roles here in Africa. Today, we're announcing, as part of our investment, a new program, a Visa FinTech Accelerator, where we plan to work with 40 startups very closely, ultimately probably taking a third of them and actually investing months' worth of time and putting some capital behind them. And we will do this for the next 5 years to try to help bring more players into the ecosystem that will help Africa grow.
How do you get around, though, some of the challenges of the continent? In particular, I'm talking about the reliance on cash and also the informal economy here. I mean, how does that play into what it is that you're trying to do?
Well, much of the world has actually become much more digital over the course of the last 3 years. It's probably the silver lining of the pandemic, and it's happened here in Africa as well. Clearly, Africa is still a heavy cash society, but therein lies the opportunity. And governments are playing a very, very important role in facilitating and trying to accelerate and set an example relative to digitization. We're doing a lot of projects with governments throughout Africa. And I just believe that there's a runway here to digitize Africa at much greater levels over the course of the next decade. And we know through several sources, including the World Bank, that if you can increase digitization, GDP will be boosted along the way.
I also want to talk to you about the U.S., which is, of course, the headquarters of Visa, and specifically about what we're hearing from a lot of executives, that potentially the U.S. could avoid a recession, and that, of course, plays into what consumers are feeling at this point in time. Based on the data that Visa has, what's your outlook? I mean, is the U.S. on a better trajectory than maybe we thought earlier?
Well, the consumer in the U.S. has been incredibly resilient. In fact, the consumer around the world's been incredibly resilient. When we look at transaction levels, they're 150% of what they were in 2019. When we look at e-commerce, excluding travel, it's 175% of 2019. And travel itself is coming back. Cross-border travel was 129% of 2019 in December, 134 in March, and 139% last month. Clearly, the consumer is doing some trading down from brands to generics. They're spending, though, the same amount or more money, but they're obviously spending more on non-discretionary items, and therefore some of the discretionary spending is probably suppressed a little bit. But I believe that I don't know if we avoid a recession, but we're going to be on the edge. But if we have one, it will be very narrow and very short, not very deep.
So and that's your projection for the rest of 2023, or how long do you think that might last?
Well, I think that there's nothing on the horizon. I mean, we're really not economists, but there's nothing on the horizon that suggests any real change as we look out as far as we can.
And also sticking with the U.S., I wanted to talk about specifically what we're seeing from Senator Dick Durbin. He's really talked about how Visa and your other competitors get a bulk of their revenue from the fees that are charged to consumers and to merchants. He's trying to pass legislation yet again to rein in on that. Are you concerned at all about this for the Visa company?
Well, first of all, these fees, these interchange fees, are actually fees that go from merchants to the banks. We only set the fees. We're not the recipient of the fees. But I do think the legislation is quite flawed, and particularly at a time like this when we talk about things like the economy. The reality is competition is as good and as robust as it's ever been. I've been in payments for 3.5 decades. This legislation will end up reducing the amount of credit available to people. It will take away rewards from consumers. It will potentially increase fraud. There's many things that are problematic about this bill. And if we look back and look at the history in 2010, when Durbin went in on debit cards, there was great promise of how great it was going to be for the consumer. But what happened? The consumer lost rewards on debit cards, free checking went away, and the promise that merchants would pass along or any kind of savings directly to consumers never bore itself out. So we have an absolute airtight history case to look at to say that this legislation is not ultimately very bad for consumers. And I actually don't think very good for merchants.
Do you think it will fail then, or do you think he might be successful the second time?
You know, I can't predict these things. I can tell you that we will work hard at making sure that we get the message out throughout the House and the Senate as to our feelings on the bill. I think there's a lot of senators and House members who sympathize with a lot of the arguments that I just made. The merchant coalition tends to be quite organized. Unfortunately, the consumers in the U.S. don't necessarily know much about this legislation, and therefore they're unaware. But I can tell you, as I've said to many of them, if you have a town hall with your folks and say, would you like less credit and less rewards and potentially more fraud, you're not going to get a lot of people cheering and putting their hands up. So I think it's, part of my job is to make sure I'm not only representing the industry, but I'm representing the consumers in the United States. But we don't take anything for granted. We'll work hard at making sure that our views relative to this act are well expressed and frequently expressed.
And let's just finish back on Africa, since that is where we are and what we're talking about here today. What is your projection for the future African consumer, especially as it pertains to what it is that you are trying to do with Visa?
Well, I think so much of this comes down to continuing to grow out the infrastructure, continuing to have more Africans have access to financial vehicles and and be in the financial mainstream. And then education is obviously very critical. I think if we look at the progress that's been made here in the last 10 years, people have access to the internet has gone from 9% to 40%. We project that there'll be 650 million smartphones by the end of 2025. Yet, as much progress as has been made, citing that internet statistic, the reality is that the average country in the world is at 62.5% of people with internet access. So I look at this as a nation that has already proven, or a set of 54 nations, a continent of 54 nations that has already proven that they can make great progress. And but that said, I think there's even more to come than has happened to date, and that's the reason why we're here and why we're so excited about the continent.
Al Kelly, Executive Chairman of Visa. Al, thank you so much for being here in Marrakesh with us, and I'll send it back to you, Anna.
Jen, thanks very much. Bloomberg's Jennifer Sabasaja with the Visa Executive Chairman. Really fascinating conversation coming there from the Bloomberg New Economy Gateway Africa Forum in Marrakesh in Morocco as we shine a light on the Africa growth story. He also talked there about the US, and he said if the US has a recession, it will be shallow. Interesting conversation. Coming up, a look at some of the market-moving events that you need to be watching out for today. Of course, the Fed's decision is the highlight. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer today on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Now let's take a look at some of the things on our agenda for the day ahead. At 8:30 a.m. Eastern Time, we get US PPI data, so another chance to talk about pricing in the US, this time at the factory gates. And at the same time, Shell kicks off its Capital Markets Day in New York. More on that in a moment. But the key event today is going to be the Fed decision. That's due at 2 p.m. with a press conference, of course, from Chair Jerome Powell at 2:30 p.m. How does he keep his optionality open for July and beyond then, Kriti, at that press conference? Let's have a look then, Kriti, at some of the pre-market movers.
Yeah, you covered the macro, I've got the micro. One of the big stories is going to be a lot of these big tech names, Tesla specifically at the top of that, adding $240 billion to their market value, a record-winning streak, and yet here they are raising prices once again in the backdrop of the fact they were cutting them to make them more affordable, to really be able to market to the general public, and yet here they are higher by 1.9% in the pre-market, accompanied by two other tech names we've really been watching. Of course, NVIDIA has been at the top of our minds, higher about 0.8% this morning, but its main competitor, AMD, also unveiling an AI accelerator, a potential rival offering to what NVIDIA has to give. So AMD shares higher by 1.6%. All in all, Anna, a very clear tech bid this morning.
Yeah, I know some of the Markets Live team are a little surprised that we didn't see more positivity around the AMD story. Where do you go for those AI gains? Is it NVIDIA or is it elsewhere within the tech space? Now, a lot of people catching up on healthcare they should have had during the pandemic but couldn't get access to. That sounds great for people, but what does it mean for those who provide the finance?
Yeah, not so great for the folks who have to kind of take on the cost, which brings us to our next movers. United Health's finance chief, for example, saying that the company was seeing pent-up demand for some types of seniors' surgeries, adding to their costs. Now, Anna, this is a really big deal, not just from a kind of sector perspective, but because United Health is a massive company in the U.S. UNH is the ticker for our radio audience, down about 4.3%, making up about 9 to 10% of the Dow, and is the 10th largest company in the S&P 500. So we talk about those tech heavyweights. We forget sometimes that one of those heavyweights is actually in the healthcare space.
Yeah, just briefly on Shell.
Very quickly, Shell, really a European story. They're boosting their dividend by 15%, getting back to their oil and gas story. Might see a read-through into the oil stocks, but for now, the ADRs in U.S. trading higher by about 1.2%, Anna.
Okay, let me just get to some lines coming through from Turkey. President Erdogan saying he's accepted the steps that Simsek, that's his finance minister, and the central bank under its new chief will take. So does this suggest more conventional monetary policy coming to the fore in Turkey? That seems to be the way that the market has interpreted this. Questions were asked when these two individuals were appointed as to what kind of power they would have. It seems that Erdogan is listening to them at least, and we see big moves in the Turkish lira as a result. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We think we're sitting towards the top end of a very strong rally.
The Fed has made significant inroads in the battle against inflation. What's left behind is a lingering higher inflation rate than we would like.
I think that the Fed isn't done, and I still don't think it's going to cut rates quickly.
If I were a voting member of the FOMC, I would vote for wait and watch.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Fed Decision Day, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market positive by 0.1% on the S&P 500. This hiking cycle started on March 16th, 2022. The S&P 500 that day closed at 43.57. This market yesterday, Tom, closed at 43.69.
Well, we can skip to it and go to the Fed meeting. We're going to pause and try to figure out what the markets are signaling right now. And there's a lot of ambiguity here. It's ambiguity Fed day. I can't figure out, John, what the markets are signaling in terms of conventional language. The conventional language is out today. People are telling me this is going to be a snooze fest, and all my radar's up, because usually when it's a predictive snooze fest, that's when a chairman can message to Michael McKee late in the press conference.
Think about what we've thrown at this equity market over the last 18 months or so. 500 basis points of hikes, Lisa. 3 bank failures in the United States of America. We've had a bear market, recovered it all. Amazing.
It's important that you mentioned that this began on March 2022. Are we now reaching the end? Is this meeting going to basically signal the end of the rate hiking cycle? And that is what people are wondering. And it's now when the pain begins. And to your point, we haven't seen it yet, given the fact that equity markets are higher. Now, do we start to get the slow bleed that was intended all along?
The foundational chart, I put it on Twitter early this morning. Nick the Whisperer over at Wall Street Journal has a spectacular chart. And on a Newtonian calculus basis, you nailed it, Lisa. We've gone up at a steepness and elevated rapidity of yield curve, of yield increase, and we haven't even hit the first derivative. We haven't even turned around. We need 1 meeting, 2 meetings, 3 meetings to get that vector that's a legitimate pause. We're not there yet.
We haven't seen the pain. The market stood up to this pretty well so far.
What I find interesting is the shift in inflation dynamics. First, it was supply side driven. It was the fact that people had money and all wanted to buy stuff. And now it's moved to the labor market. And that seems to be the theme, not only from economists in the market, but Bernanke, as well as Olivier Blanchard, who put out a paper on this. But this, to me, how do you end up with a soft landing if you need to see the dynamism in the labor market cool down much more materially than it has so far?
Does the word skip get into the statement today? Do you think they use that word?
No.
We're skipping today? We're skipping.
It's not.
Doesn't sound very professional, does it?
No.
We're skipping today's meeting.
I mean, are they going to say pause after all those sort of hand-wringing? Are they going to say
Well,
pause?
this is a
Right.
serious question because this is all financial media talk. Forget about it. What we've got
Hang
here.
on a minute. Let's not. It's their talk.
Skip it.
Officials
Okay, yeah, but I
themselves
don't
have
care
used
about
it.
they. I just care about what happens at the meeting and then the press conference. And my answer is we're having a healthy discussion about the symmetric or asymmetric effects of stopping. And there's a belief. Matt Lazzetti sat right here with Deutsche Bank and said, no, if they pause, it's a vector towards rate decreases. Others disagree. Bill Dudley says it can be symmetric and you can still move higher. That will be what we'll have to listen for today.
Today is a three-part act. You get the statement, you get the projections,
Yes.
you get the news conference with Chairman Powell. Going into all of that, your equity market looks a little something like this on the S&P 500, just about positive on a 4-day winning streak on the S&P coming into Wednesday, up by 0.1% this morning. In the bond market, yields just about unchanged on a 10-year maturity. Lisa, 380.75.
Stasis, a bit of calm ahead of the key events of today, which begin at 8:30 a.m. U.S. PPI following the CPI report that we got yesterday. The expectation is for it to cool down because this is the stuff prices, basically not necessarily the services prices, but the manufacturing inputs. How much does it decelerate and does it matter? Because people are looking past this to really the services-induced inflation. At 2 p.m. is the FOMC rate decision followed by Fed Chair Jay Powell. We'll be having a news conference at 2:30. I am sure he will mention the word skip. He might even directly message it head on. And John, you were talking earlier about the potential for dissent on the margins as well as potentially a shift in the dots. Are they going to signal higher for longer and potentially a slower bleed in the economy? And at 1:30 p.m., we're going to be kicking off our special coverage, which will continue until after the press conference. Randy Krosner, former Fed Governor, Matt Lazzetti of Deutsche Bank, Michael Collins of PGIM Fixed Income, as well as Seth Carpenter of Morgan Stanley. John.
The team did a fantastic decision day guide here at Bloomberg. I didn't realize the last dissent from a Fed governor, 2005.
I had no idea. I would never have guessed that.
I did not know that.
Isn't that amazing?
I think the British do it so much better. I love the way the British do
Plenty
it.
of Fed presidents have dissented, but
this is a legacy, I'll say, from
like
Greenspan. And
the board just does the same thing.
I just think the British do this so much better, and it's great to know that Catherine Mann's all on fire because she wants a higher rate regime.
Saw that, yeah.
You know, I'm sorry, with the UK growth today, the growth surprise in the United Kingdom, I'm sorry, the people saying, you know, United Kingdom, get your inflation in order, look like geniuses, and that includes Professor Mann.
Marvin Lowe joins us now, Senior Global Macro Strategist at State Street. Marvin, wonderful to catch up with you, sir. Let's kick off our Fed coverage. What are you expecting today? Skip, hike, pause? What is it?
Yeah, you know, unfortunately or fortunately, I think the market has it right. I think they're going to skip, you know, whether or not that's a term that they use, I guess it's up for debate. But they can't signal that they're done because the data is not there to say that they're done. So they're going to do a hawkish skip. I guess we're making up these terms as we go, which means the dots are going to increase and probably the pace of decline going into next year is going to shift a little bit.
Marvin, with all this ambiguity in what is deemed to be a snooze fest today, why is the stock market going up, up, up?
Yeah, so, you know, certainly the market is still taking the view that there's a chance the Fed could pause, that it's over with, that this credit situation is going to keep them at bay. And, you know, they ultimately feel that policy is restrictive enough. That's tonic for an equity market for sure. But I also think that the liquidity discussion, which really is kind of falling into the background, is helping risk assets at this point. Post debt ceiling, you've had a lot of liquidity enter the market as this reverse repo facility has gone down. And I think it potentially could give a false sense of security, given that liquidity has to find some place has to find a home ultimately.
You said this credit situation, and I'm struck by the fact that the Fed still seems concerned about the lingering issues in the banking system, whereas markets have moved on. Is that what's going on, that markets are basically counting out both further Fed rate hikes of any meaning, as well as a banking crisis? Well, the Fed is still looking to a credit crisis that hasn't yet materialized and that markets don't really see right now.
Yeah, for sure. You know, certainly the dynamics around concern with the banking system remain out there. They're a little bit in the background, but certainly the worst case around systemic risk is past. But the Fed continues to be concerned that we're going to get significant credit tightening because of this deposit situation that exists between banks and money market funds, and how reverse repo fits into that discussion.
Right now, as we shift forward, how are they going to signal their desire to see unemployment rates actually go up materially? That really right now they need to see the pain in the labor market much more than it's either forecast or has evidence that we've seen in practice.
Yeah, I mean, it's higher for longer ultimately. I think they're going to try to signal that they're really not thinking about the next stage of this, which is the reduction process. They'll probably try to do as much signaling as they can within the dots. But also raising the unemployment expectations, or actually I should say lowering the unemployment expectations going into next year will also say that, work is not done yet.
I look, Marvin, at the dual mandate of the Fed, and I think we're in a comfortable place where we can say they've screwed up both mandates, inflation dynamics, and the challenge.
Opinions are out there in the market. I think the same amount of opinions are out there with the Fed. I really think that they're just going through this week by week, hoping that the data kind of moves in their direction. There are signs that it might, but those bigger numbers remain a challenge for sure.
But we had a stasis. Mike McKee says we had a stasis inflation report yesterday. Whatever. As far as I'm concerned, they're just waiting on data, including the inflation report, roughly July 12th, whenever it comes out. I mean, to me, it's just they're wildly data dependent, and that's all there is to it. Do you agree with that?
Yes, and they do not seem to really have a good handle on how to approach policy, given their uncertainty with this data. So, their forecasting ability is certainly taking a hit. So they'll put out the SEP. They'll say that things are not done, and the market will continue along the path that they are done because they're really not signaling what the response mechanism is supposed to be at the FOMC.
Marvin, do you think Chairman Powell would welcome some dissent with that in mind?
No, I don't think so. I think that they're trying to send this message that they're on top of things, that inflation is going to move in the right direction, and they'll probably, I think, get some dissent out of the regional board, but from the regional presidents. But as you mentioned, at the board level, they've been working hard to make sure they have a unified message.
Marvin Lowe at State Street. Marvin, thank you. If you just think about it, if they don't hike today, but they want to signal to the market participants, everybody else, that they're willing to hike again, maybe some dissent from somewhere, Bramo, might be a welcome event.
I would agree with that, because right now, what credibility do they have that they actually will hike again if they don't hike now? I kind of go back to Andrew Hollenhorst's point, which is, can they really signal a hawkish skip if everyone's saying, if you really see the need for another rate hike, why don't you do it now?
Will a skip be contradicted by the adjustment they might have to make to the projections as well? Let's work through this together. So 2023, they've got the unemployment rate currently in the current forecast, end of the year at 4.5%. PCE inflation, 3.3%. And they've got Fed funds finishing the year basically where we are right now. Tom, what needs to change today?
I don't think anything's going to change today except within the press conference. I think the people are right. It's going to be as ambiguous as possible, but he may let something down. I will predict we will see more written statements to answers to questions than we've ever seen before, even more than Lagarde the last time around.
If I asked this question 12 months ago, I get the feeling I'd get a very different answer. Does Chairman Powell care about the equity market rallying? 12 months ago, without a doubt, he cared. Without a doubt, he cared. Does he care now?
Greenspan, chapter 23 of any economic book, yes, they're supposed to care about the equity markets. This mess has gone so far beyond, I don't think they care.
The problem is, how can they really make some sort of statement on artificial intelligence and the promise of some sort of technological advancement? And a lot of people, when you read even David Focus-Landau, he put out a report today where he said, yeah, we do see recession, but AI could be a game changer, let alone some of the other technological advancements. How do Fed officials weigh in on that?
But if the market's going up, not because of AI, but from other reasons, I think if we guess that AI is overrated right now, which is a safe guess, John's question is important. Does he care about the prosperity of the market for the haves? And the answer is I think given the post-pandemic ambiguity right now, I think it's the oddest of odd Fed meetings, and we'll give you full confusing team coverage at 2 p.m.
Just to be really clear here, it's a safe bet that AI is what? What did you say AI was?
Overplayed. Overrated.
It's a safe bet if you're not riding NVIDIA and this 170% rally and you're sitting in cash, then it's a safe bet. I mean, if you've got money on the line here, Bramo, you're riding a wave, aren't you? A big one.
I think right now you can say it's a safe bet that it's overrated. Yeah, correct. If you're not in it, but if you're in it, and frankly, if you're in a business advisor, it's hard to hear the same thing from them. They're not saying the same thing.
I go back to the high-tech firm Procter & Gamble. I mean, it just happens to be PG, or I go to Colgate, whatever, just to see a market. And the fact is I got Procter & Gamble trading at a 25 multiple.
Yeah, you've mentioned
that. Makes no sense at all. I mean, I don't even know what to do with that. And we heard that from David Kostin, where he's reassessing at Goldman Sachs to a regime a lot of people don't believe in, 4,500 SPX, and he's doing it on multiple expansion. And that's the massive equity story of the first 6 months, not AI.
Let's squeeze in one more single name. We'll talk about this a little bit later on. Tesla, third time in 2 months, prices up $250 on a Model Y. That starts at $47,740.
PE multiple 75.
It's not bad, is it? Yeah. Is that a safe bet, Tom? Equities on the S&P, positive 0.1%.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment.
And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
This is called election interference and yet another attempt to rig and steal a presidential election. I had every right to have these documents. I will appoint a real special prosecutor to go after the most corrupt president in the history of the United States of America, Joe Biden. They're not coming after me, they're coming after you, and I just happen to be standing in their way.
Former President Donald Trump fighting back after pleading not guilty to the charges of alleged mishandling of classified documents after appearing in court in Miami yesterday. From New York City this morning, good morning if you are just tuning in. A Federal Reserve decision a little bit later on this afternoon, going into that 4-day winning streak on the S&P 500, looking to add some weight to the rally. Equity futures right now on the S&P slightly positive by 0.1%. Bond market's doing absolutely nothing, 381.34, but doing a ton of something in yesterday's session. What was that about? We blaming the UK again? Big moves in gilts off the back of the labour market data. It's interesting, if you look at the move in gilts, we're back to the quasi-quartane kind of levels at the front end of the curve, Tom.
I think the volatility, I'm glad you bring this up.
Currency's not, bond market is.
The volatility here is tangible. I mean, that's all there is to it. And completely off the radar, people, euro-yen at a 151 has broken out to new strong yen, weak Japan, new strong euro, I should say, weak Japan. And I don't even know what to make of that. I mean, there's just really a set of tensions here going into this meeting. I mean, things that have been expanded.
Got a lot to work through, Tom. The Federal Reserve, got to talk about that. The prospect of stimulus out of China. And maybe we get a bit of divergence in central banks. But ultimately, anyone that tried to pause, I'm thinking of the RBA, I'm thinking of the Bank of Canada, they've come back and started hiking again. The Bank of England started all of this. I remember Lisa called it at the end of 2021. They came out, was it 10 or 15 basis points at a time? And I remember picking up the phone because I was on vacation. You said, John, you said the year was over. And I said, yeah, it's going to be interesting to see how far they can go. And here we are talking about the prospect of going from like nothing to close to 6, Tom.
We're at restrictive. Now, what level of restrictive is a wide open debate among our guests, but it's a lot heavier discussion both ways at restrictive than it was at some form of accommodative. I'd also go to the Bloomberg Financial Conditions Index, which I might point out is above 0. All you need to know, folks, is that's accommodative. That's not what Chairman Powell desired a year ago, 6 months ago. Jackson Hole, he desired a negative statistic on the Bloomberg Financial Conditions Index, and it's not there.
The UK, the US, Europe, if you go back 12 months, even longer, talk about the hiking cycle that's going to be in our future. Ask people how much damage would be done to labour markets. In the UK, in Europe, in the United States, you'd be way off from what's actually developed over the last year.
Let us digress and move to what we saw yesterday, and thanks to Kaylee Lyons for her coverage in Miami yesterday of these historic events in America. Somebody asked me the other day, yesterday rather, on the street, what do I look at given all of this? And I actually want to know what actual lawyers think. Whatever the politics is, I really don't care, right, left, whatever. That's not our job here. But I want to know what lawyers think. So I go to Lawfare, which is an interesting place, People by Lawyers, and they've got a beautiful, beautiful essay here on all the cross currents going on in the last 24 hours. And they distill it down to discrete crimes against 2 individuals. That's all the allegations and what we're going to see played out over months and months. And they also state in a single sentence, this is a very big deal. When it is a big deal for the nation, we turn to Leslie Vinjamuri, head of U.S. and America's program at Chatham House in London, encyclopedic on the American debate. How's this being taken in London, Leslie? I'm just absolutely fascinated. Do people care about these historic moments in Miami, or is it off the radar?
No, it is, of course. And of course, Friday was a sensational day because there were sort of mirror image findings. But I think that everybody here is looking back at the United States with a slight feeling of dread as to what might come next. It's been, as we know, quite a historic moment for transatlantic cooperation, with the U.S. really leading on that. But that is on, a foreign policy, national security issue, and always looming in the front view and also the rear view mirror is, what will happen with Donald Trump, what will happen to the Republican Party, what's coming next in 2020.
Got some technical difficulties there with Leslie Vinjamuri right now. We're getting the feed ever changing there in the video and the sound as well. Let our team work on that right now, and John will pick it up. I think what Leslie Vinjamuri's skill here is to take the dynamic of the United States and actually say, well, what do they think in England? What do they think in China and that? And the only word I can come up with is just further lack of confidence in who and what the American projection should be worldwide.
Well, these are meant to be the stable institutions, aren't they? They're meant to be an example for the rest of the developing world. You mentioned China. Let's talk about emerging markets. What is the EM thinking about this? after the US has preached and told them everything they should and shouldn't do over the last several decades, and then it plays out in this fashion. It's really, really serious, TK, what's developed in the last 24 hours. I think we've got a decent understanding of what the president's playbook is going to be. He's still in campaign mode.
Oh, I think,
and you saw that leaving the court. Where did he go?
Absolutely.
Cuban restaurant. They're all singing happy birthday. It's a show of force. He gets to convey to the general public how well supported and loved he is in places like Florida still.
This is critical because you're dead on, and what's so important here is this has been a proven successful message and path for a guy who increased his votes from 2016 to 2020. He's back on path. He's back on track.
Who's to say it won't be successful again in the primaries? And you can see that captured by the polls. But Lisa, as we'll discuss over the next year going into the end of 2024, it's very different winning a primary and winning a general.
And it's very different when the world has changed in that time period. And I do wonder, Tucker Carlson, who was fired from Fox, put out a Twitter post yesterday talking about really the evils of the establishment, foreign policy and beyond. And Elon Musk retweeted it, Tom. This is one of the things that I'm wondering, how does that change the dynamic for the U.S. at a potentially fraught moment internationally as well as domestically?
Well, domestically, it's the middle. What does the middle say here? What does the middle do? But to your point is we have confidence in what, remember the photograph of President Trump with the G8? He's standing there. They're sitting at a table, Angela Merkel and the others.
All leaning over him.
All leaning over. And to me, that's the redux we're going to see here. There's no question about that. I believe we have Dr. Vinja Murray with us again from Chatham House. Leslie, it's going to be a long, drawn-out process. How should our audience interpret the weeks, the slow-motion process to come?
It is going to be long and drawn out, and it depends partly on what happens in this pretrial phase and how long and drawn out it is. And, you know, the big question in many ways is for the Republican Party, for all of those who are quietly waiting to see whether Donald Trump can stay the course through this, or whether there will be an opening moment where some people who would, I think, very much like to put their hats in the ring, and also people who would like to not put their hats in the ring, but also don't really want to endorse Trump, but don't see an alternative right now. And so I think, you know, how long?
I think we've lost Leslie again. Our apologies for the technical problems. Leslie Vinja Murray there of Chatham House, trying to weigh in on recent developments. Good friend of this program. She'll be back soon, no doubt. TK, I think we understand how the campaign's going to shape up now from the president. That's one. But two, ultimately, there's still legal issues. It's not just theatre, is it? What we don't understand is how the legal issues are going to play out down in Miami over the next several months.
It's easy right now to have an opinion, and the mandate, clearly the heritage of Bloomberg News and frankly Bloomberg surveillance, is really trying to not convey an opinion, an angle. And the one angle I would say is let law work out, let the process work out, is something that can be bipartisan.
That's pure. It's also unrealistic during a political cycle where there's going to be a lot of jawboning and everybody has to take sides. I'm curious about the evolution of some of the opponents, the other potential Republican nominees, the evolution of their views with some sort of
Chris Christie was stunning yesterday.
Chris Christie's job right now, he's literally getting paid by fundraisers to be the attack dog on the former president.
I'm not willing to say that, but I am willing to say at dinner last night, I was talking to Afterthought, and that was the topic of conversation.
Oh, what did they say?
Was a former governor she said, "Has he lost weight?" And I said, "Yes, I think he's lost weight." You know, that's where the kids go.
Political analysis.
But I said, you know, this is the kind of debate that would be engaged in a normal environment.
Bramo.
Yeah, exactly.
Yeah, you know, she threw a roll at me.
Okay. Dinner at your house sounds great. Equities positive 0.1% on the S&P. Bruce Kasman at JP Morgan up next.
had a long-standing presence here in Houston for the past, I would say, 20-some years, since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Live from New York City this morning. Welcome to the program. We are several hours away from a Chairman Powell rate decision at the Federal Reserve. 10 consecutive interest rate hikes from the committee, and they may well skip June. Here's the price action going into it. Equity futures on the S&P 500, slightly positive. 4-day winning streak on the S&P, the longest since April. The S&P 500 at the highest going all the way back to April of last year. Think about where we were the last time this Fed met. The S&P 500 closed just south of 4,100, closing yesterday approaching 4,400. Equities have been higher since the Fed last hiked. In the bond market, yields have been higher as well. The 2-year on that day, I believe it was May 3rd, closed the day at 380. Right now, 466.25. That is an 86 basis point move on a US 2-year between meetings. And that means one thing in the FX market, dollar stronger. Euro dollar just north of 110. That was the last time we met. Right now, 108.06. So what we've had basically, Lisa, over the last couple of months or so, equities up, yields higher, dollar stronger, big conversation about US exceptionalism making a comeback.
Which raises the question, is this enough to really generate the decline in inflation that the Fed would like and the decline in employment strength that people are talking needs to happen in order for inflation to materially come down? That is what I'm curious to hear about from the Fed today.
Plenty of calls this morning. This one from Bruce Kasman and JP Morgan. Here's the quote. The FOMC meeting is likely to see a divided committee decide to pause. Chair Powell, along with Vice Chairman nominee Jefferson, has suggested that the Fed should take stock of how the economy is handling the 500 basis points of rate hikes. And for that reason, Tom, I think that address from Governor Jefferson a couple of weeks back, the reason why a lot of people, regardless of the data, thought they'd take a pass at this meeting.
Well, that's certainly the consensus right now, and we'll have to see on that. We will have this afternoon Diane Swank with us to look at this minutia, and particularly her expert impact across America. We'll have Randall Krosner with us of Chicago, one of our great financial economists. Now we take a bigger, broader picture with Bruce Kasman, of Chief Economist and Head of Global Economic Research at JP Morgan. And we do this with his Columbia heritage of, in the modern day, Jeffrey Sachs, Richard Clarida, and of course the foundational efforts of Robert Mundell. Dr. Kasman, I want to cut to the chase here and talk of Jerome Powell, central banker to the world. Your focus is on continental Europe. What is the drama for Europe today in the decision-making of Jerome Powell and the Fed?
So, as you've already mentioned, it looks like the Fed is going to pause. The ECB is also meeting this week and is likely to tighten and also signal that they have more work to do. I think one of the big issues as we look at transmission here is about synchronization. There's obviously a lot of concern about a U.S. recession. We don't think the U.S. is falling into recession right now. But Europe is showing very strong divergence in performance. The service sector is doing well. The manufacturing sector is doing poorly. It has the same issues around bank credit tightening as the U.S. How the European economy plays out here is going to be a very important factor in determining both the overall global picture and certainly have some impact on the U.S. as we go through the rest of the year.
You and I, Bruce, have read Dooley, Garber, Folkert's, Landau, and all the different macroeconomics coming out of David Folkert's, Landau's work. And one of his great comments is there will be fiscal stimulus in Europe that will come to the rescue of Europe. It's a different fiscal calculation than Jerome Powell has. How does that play into what Europe will do off of this meeting today?
So, I mean, the simple point here is I think there's more work to do for the ECB. Personally, I think the Fed will ultimately have more work to do here. It's taking a pause, but I don't think it's going to get inflation under control. And I think one of the things that people who are looking for an immediate recession are missing is that while monetary policy has tightened a lot, fiscal policy is moving in the other direction. That's there in Europe. The recovery fund, as well as some of the emergency measures around last year's crisis, is a factor. In the U.S., look at what's happening on defense spending. Look at what's happening in government hiring. State and local spending is high. This is a very different picture than we've seen over the last two cycles, where early in the cycle, fiscal policy in the U.S. and Western Europe tightened materially.
Bruce, this is really interesting. The idea that fiscal stimulus, on one hand, will force central bankers around the world to tighten much more than people currently expect. Is that what's going on? Do you think that people are misguided in thinking that the Fed is done pretty much around here and is going to hold rates where they are because of the fiscal impulse?
I don't want to put too much weight on the fiscal stimulus. I think it's one factor among two or three, which is promoting resiliency here. And I do think the most important factor in terms of what's going to drive more central bank tightening, if we get it, is the persistence of inflation, the underlying shift that's taken place in the inflation process, how that's playing through in a world in which we still have damage done to labor supply and tight labor markets. That's the ultimate problem. And just from the point of view of the Fed today, it's reasonable to take a pause, but what a pause is doing here, it's promoting risk appetite in financial markets, which is undermining monetary transmission. And it is, I think, signaling to the market that the Fed is gradualist on lowering inflation. And that works against the idea that there's some inflation that's becoming embedded in expectations and wage and price setting. This is the problem the Fed has today. And that's one of the reasons why they're going to signal to us that they're not done. But it's going to be hard to find that balance here.
I'm going to say something kind of sacrilegious. Let's say it's actually worse for risk markets right now if the Fed doesn't hike further and keeps rates where they are for a very long time. Isn't that worse than potentially breaking something and then having to come in with rate cuts and sort of doing a full reversal, the sort of slow bleed, this sort of boiling of the frog that a lot of people are anticipating?
Ultimately, it might be, but right now, I think if there's anything we should appreciate as economists and more generally, is that it's very difficult to actually forecast exactly where we're going to be in 6 to 9 months. There is a risk the economy is going to slide into recession. The fact that the Fed is pausing, the fact that the Fed is telling us it's going to be gradualist on inflation in terms of bringing it down is a constructive signal that promotes resiliency. I think there is, on my mind, a likely scenario where inflation doesn't come all the way down and the Fed has to come back. But there is still some possibility that we have a soft landing. So I think for the near term, it is certainly a reasonable thing for the Fed to do, and it is certainly going to promote resilience in the economy. I do think more likely than not, it's not going to prove successful. And I think, as you say, we're going to pay a price for that.
When you talk about the potential for inflation to come back or not come down all the way to where they'd like, is that driven by wages and some sort of wage price spiral that people are underappreciating?
I think it's a bit of a mistake to put it on tight labor markets, to focus particularly on what we call a Phillips curve relationship. I think what you've had happen here is two things. One is we've damaged supply in a way that it's not fully recovering, and particularly in the U.S. and Western Europe, it's about labor markets in that regard. But I think the bigger issue here right now is that we've started to embed psychology in which wage and price gains are linked, which wasn't the case over the last 30 years. And I think in order to bring down inflation, you need to compress pricing power on the corporate sector side. Unfortunately, when you do that, that does hit labor markets. But it's a pricing power story. It's changing the behavior of businesses, removing that price pressure that's coming through the system, which is something which is a break from what we've seen over the last 3 decades.
Bruce, it's J.P. Morgan's fault. I'm going to go to Richard Clarida, the former vice chair, and of course all his work at Columbia. And in an essay in The Economist, I'm going to say a month and a half ago, he really made a case that we're not going back to 2%, that this is a Fed that has to find 2.x%, whatever the number's going to be. Your Michael Feroli changed the debate single-handedly. We're going to blame Feroli by coming up with a potential GDP statistic that was well under 2% as well. Yeah. Do we have to adjust that now after all of this imputed inflation into the system, what the Biden stimulus has wrought? Do you have to adjust the Feroli potential GDP up, which makes it more comfortable to get to a Clarida statistic?
So we've been running with a potential growth rate for the U.S. of about 1.5, really, as you're mentioning, for almost a decade now. And I think you're raising a very important point, which is there's a lot of stuff going on here that could have an influence on potential growth going forward, and specifically productivity growth, which is a key to the inflation outlook. I'm agnostic here. There's a lot of cross currents. I haven't seen anything that convinces me we're either materially raising or materially depressing a potential growth. I think we've done damage to supply in that we now have probably 2.5 percentage points less of people in the workforce than we had on the pre-pandemic path we were on. That's the immediate problem, and how that is interacting with underlying inflation psychology. If we get better potential, that'll help us. If we get worse, that'll make the trade-off worse. I'm agnostic on how that's going to play out, at least at this moment.
I look, Bruce, let's bring it back to the festivities today at 2 p.m. I hate the skip and the pause chat. John busts my chops on it nonstop. Bruce Kasman, are we just debating an asymmetric or symmetric outcome here? I'm clearly in the camp that it can be an asymmetric decision. Are you?
Well, first of all, it's a divided decision. Keep in mind that probably close to half of this committee would vote for a rate hike. So it's going to be a pretty contentious debate. I also think it's hard to talk about a skip. It's possible, but it's not our view. I think the Fed has 6 weeks to the next meeting. If it is actually trying to take stock of what actually is happening in terms of banking sector stress, monetary transmission, it's going to take more time to see that. But at the same time, I think they have to tell us that they have not declared victory on getting inflation down, that there is pressure for them to move more, and that the likely scenario, and I think it'll be in the statement, it'll be in the dots where we'll see an extra rate hike being pushed in, and it'll certainly be in more detail and more color in Powell's press conference, that they're more likely than not to continue raising rates sometime later this year.
Bruce, do you think they'll care that equities are rallying?
I don't think the Fed's very sensitive to equities rallying, but I do think the broader picture here is that financial markets are showing very little stress. They've improved. Risk appetite has increased. Credit conditions have improved in the last 2 or 3 months. And there's a significant offset to the tightening that's going on in bank credit. And I think that does matter to the Fed. And they're trying to manage that in a way that they don't unleash unwanted exuberance here that they're going to have to deal with later on down the road.
Interesting. Bruce, wonderful to get your perspective. Looking for a divided pause.
Awesome.
A little bit later on this afternoon. Bruce Kasman at JP Morgan. TK, I know you hate the language, but it's the Fed's language at the moment. They're going around, they're allergic to the word pause because they believe that if they say pause, this market price is in cuts. They hear pause, this market hears the cycle's over, and they don't want to communicate that.
That conversation with, I literally want to call him Professor Kasman, with Dr. Kasman, was so rich about the broader theoretical picture of what we have wrought out of this pandemic. And I think a great divide between me and you two, I'm with McKee. I give these people great discretion.
I don't know how McKee feels
given
about that.
Dealing, no, I give them great cover with dealing with a medical event. But you know what? Is the medical event over? I mean, that's the raging debate here. Are they working within conventional monetary analysis, or are we still in pandemic land?
I don't think we're in pandemic land in quite the same way. And Tom, what pandemic land meant in early 2020 is not what pandemic land meant in 2021, in 2022.
Yes.
That's what they missed. The kitchen sink did the early part of the pandemic, living in pandemic land, your phrase, and they did what they had to do. Coming out the other side after round of fiscal stimulus and support packages that came from Washington, from President Trump and then from President Biden, with a much larger package in early 2021. TK, pandemic land changed. And this chairman missed it.
And part of this, we haven't even discussed this.
They were doing QE, Tom, right the way through 2021 into early 22.
Where we are today, Lisa, and it's a double barrel. We're looking at Apple as a $3 trillion company. And on the other side, I'm seeing a lot of articles in the land of Marty Fritzen about junk debt all of a sudden starting to blow up. I mean, the barbell here of prosperity at Apple versus the challenges in the Bramo space is something.
Although the problems in the Bramo space are getting resolved pretty quickly. If you take a look at spreads, for example, in high-yield bonds, they're the narrowest, they're the lowest going back to March.
Why?
They have rallied
Why?
because people see this dynamism continuing. I want to pick up on something Bruce Kasman said. The Fed doesn't want to unleash unwarranted exuberance. The fear of unleashing exuberance after raising rates by 500 basis points suggests something pretty profound about an economy that just is not diminishing to the degree that anyone thought. And to me, that is the key question. Why? Is it just lag effects, or is there something new in the post-pandemic reality with a tightness of a labor market and the shifting winds of a strong economy?
Do they accept a higher inflation rate? You mentioned Rich Clarida. Is that the direction of travel? Jim Karen, Morgan Stanley talking about the same thing yesterday.
Yeah, and what's so important there, 2% is not the old view. It was a sub 2%. So it's a long way to a Clarida level.
Equities this morning positive 0.2% on the S&P 500. And read a set of energy aspects up next.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I have been consistently in the camp that we would see some slowing in growth, but no recession, and that we could see inflation come down. And part of that is because I've had confidence in the Fed that they would be paying careful attention to the data. We don't know how long it takes for monetary policy changes to actually affect the economy. And I think that they have already done so much.
Abby Joseph Coven there of Columbia University, and previously, of course, for a long time, of Goldman Sachs. From New York City, Fed decision day, equities up by 0.2%, four-day winning streak on the S&P 500. Coming into Fed day on the longest winning streak going back to April, and at the highest levels since April of last year. And even when you account for all the hikes we've seen, the banking failures through March, which we continue to rally through, this equity market is now positive, point to point, from the start of this hiking cycle, Tom. Going into today's
It's a great
meeting.
equity market. People are going to go, what did Abby Joseph Cohen say? Well, she didn't predict a bull market, but she clearly stated, John, she's in the camp of rotation to more valued, away from tech towards those that really haven't moved. She's not doing an analyst thing. Was that hilarious at the end where she was jamming on David Costin?
Did she give a price target? I thought she did.
She got a price target,
didn't she?
and she's like, well, I read Costin. I'm paraphrasing. I read Costin last night, but, it was very funny.
Are we tracking price targets out of Colombia now?
We are. I think she's got a Bloomberg at her desk.
She's actually advising a lot of public pensions and such, and it's a very interesting moment. She said that really the time to get into equities was last year, and now it's really more in fixed income.
Doesn't that really frustrate you? It drives me nuts.
I know, it's like you missed it. Forget
it's
it.
always the way. Everyone's like, the easy money was made. I mean, stop it.
But that's the first leg.
I hate that phrase.
You're right. You're 100% right.
No one ever comes on TV and says, next 12 months, make the easy money. Like, it never happens. Next 12 months, make the easy money.
The question is, how do you have a second?
It's made.
How do you, if you believe in a Akampora Yardeni October low, what's the second leg of this bull market look like? And that was the question to Ms. Joseph Cohen. And the answer is she looks for rotation.
Well, the pain trade would be a rotation trade.
Yeah.
A lot of people have missed out on this rally. Yeah. They've missed out on this move. They're sitting in cash. I'll catch up with Bob Michael at JP Morgan Asset Management. We'll do that about 9 a.m. Eastern time. Look out for that conversation because he thinks it's a real risk you get trapped in cash. And that's been a conversation on this show now for a number of weeks.
About 4 days ago, I said to somebody, can we just get Amrita Sen on? Get in her date calendar. Let's go, let's go. Co-founder, director of research in energy aspects on oil, on hydrocarbons, on the shock of $66 print on West Texas Intermediate. Amrita Sen, what is your confidence that demand will weaken in oil?
I think I have very little confidence of that, Tom, simply because the data continues to come in stronger than expected. Now, we've been conservative on demand, that's fine, but I absolutely don't buy into this argument that, oh, China's not reopening, the data's coming in up 3 million barrels per day year on year. Sure, the base is weak, but even otherwise, India's printing record high growth. US demand, particularly on the consumers, is still holding up. There's a huge disconnect between the data that's been coming in and forecasts versus prices, and it's really hard to square right now. I just don't think I've seen a market like this before.
I agree, and that's certainly the zeitgeist among everyone that plays the petroleum game. Is your scope here for Brent crude to move X number of dollars up per barrel, $5, $8, $10, or does Amrita Sen look for a jump condition on the path back up to 120 a barrel?
I think there needs to be a very clear kind of jump condition. There needs to be a catalyst. I think right now the problem is we just aren't getting the signals from prices that, oh, things are tight, even after Saudi Arabia made those unilateral cuts. Part of it, I genuinely believe, Tom, if you ask me, what did I miss this year? It's been the rising cost of capital and what's that doing to the market, which is destocking. Nobody wants to hold inventory, and I think we are, as a world, going towards lower inventory forward cover. And I think that's probably one of the big reasons oil isn't rallying, because everybody's just dumping inventory. Once we are through that, that does lead us more susceptible to price spikes from any supply losses. But we need to see like very clear evidence of stock draws, because so far, yes, stocks are drawing, but I guess it needs to be maybe in the visible centers like the US, and we've had so many refinery outages, that's creating a problem as well.
This is what Jeff Curry was talking about as well, the inability or unwillingness to pay to actually store oil right now, and that people just don't want the physicality of it in part, and as well as some other issues. And yet the International Energy Agency came out overnight and said that demand is diminishing greatly, in large part because of renewable energy and renewable and electric vehicles. Do you think that's overstated, that we could see peak oil demand in the next couple of years?
And yet they revised demand up for this year. Did you see that? I think there's always going to be this dichotomy with the IEA, that they keep pushing the narrative of peak demand, and yet they keep pushing back the year, or they keep raising the level at which demand is peaking. Pretty much the last few years, they've managed to underestimate demand considerably. And I think, look, from a government point of view or a policy point of view, yes, the narrative has to be that there is going to be peak demand because we're trying to transition away from fossil fuels. But the reality is very, very different, particularly in emerging market. Yes, China, for instance, we do think gasoline peaks this year, but that doesn't mean it falls off a cliff. And the biggest driver still remains remains trucking, and it's really diesel demand.
So what's sort of the distinction between the people who think that renewable energy sources are making a material impact on demand, rendering oil a sort of insufficient view or lens on global demand, and those who say, stop it, it's not true. You're actually seeing lots of diesel demand and lots of gasoline usage.
I don't think, I mean, it's not that black and white, right? I don't think that renewables isn't making an impact. Of course it is, but it is theoretically how much more could oil demand have grown by? It's not that we are not seeing record high demand in places like whether it be Latin America or India or even China. I guess the question is, without renewables, could oil have grown further? Yes, absolutely, it could have, but that's confusing matters, right? This year, IEA's report today as well says oil demand's going to reach a record high. Are we investing enough to meet that demand? No, we're not. And I think that's where the crux of the matter comes through.
Amrita, thank you for your perspective. Amrita Sender of Energy Aspects on a very interesting oil market right now, and an unhappy Riyadh, an OPEC Plus who does not want to see prices down here at 75, Tom, on Brent.
Absolutely not, and Lisa nailed it here with the linkage here between what Amrita said and Jeff Curry of Goldman Sachs. I thought Jeff, the microeconomist from Chicago, was just brilliant here on, wow, has the world changed for Riyadh, for Houston, and for everywhere else in the oil world with the interest rate structure in here. I mean, it is a sea change for someone as acute as Amrita said.
Big change for the SPR as well in the last 18
I don't understand. Where are we on that?
I saw a story the other day that said they're going to look to refill it by 12 million barrels this year. This year, Bramo, after draining it by what? More than 100 million.
I mean, basically, a pitbull on...
Big effort.
I'm lost in this. Isn't it just a simple analysis? Wait. Oil is printed $66 the other day.
Yeah.
West Texas is 70. Doesn't somebody just go fill the SPR? Isn't it that simple?
I thought that was what was happening.
Well, no. Not so much. And how much is it just because they don't have the money right now, especially with some of the debt ceiling constraints and some of the money
Use your
that's
Shell
other
gas
places.
card. You get frequent flyer miles.
They're just happy with
it.
where prices are. They're just happy with where prices are.
I know, but the reason for the Strategic Petroleum Reserve is to have it when we get an Amrita Sen 120